All right, let's kick it off.
Roll another blunt, man. This is good times. You full of shit, and you need to quit.
No smoking on the airplane. Tampering with the lavatory smoke detectors, that's a mandatory 15 years federal prison sentence. Just make sure you put the battery back in it. What's happening, everybody? Back again. God willing. More fun. More FUD. Always more FUD. I gotta watch this Commander 35 video. Watch this Short the VIX video. $390 per share. So exact. All-time lows when to start dip buying. Buy the dip. Judge forcing Moass. I'm curious to see like what that even is. What did you even twist to be able to say that, you know? It's now or never.
You're too controlling. My chin is something.
Wonder if he's referring to that song.
You need to tuck your
Probably
tail.
not.
You're a woman, but you think you're an alpha male till you land on the ground, bleeding like hell, begging the cops to take
AMC and our new environment. New environment. Tuesday, this will happen.
You talk too much to everybody.
Look at that. 3 minutes and 33 seconds. That's
How can you be jealous on Facebook?
clearly that's something's gonna happen, right?
And you need to quit. Baby, you full of shit. And you need to quit.
Short squeeze starting sooner than you think. God, Shill Talk Daily is really pumping out the bullshit these days, huh? Short squeeze confirmed. Fintel. Citadel confirmed. No shares left to borrow. Out from Boston. The checklist. Get the checklist. Brokers are treacherous. Broker apostrophe S. This is a Harvard grad, also a law student. Broker apostrophe S are treacherous. Brokers what? Brokers something. A brand new way to look at AMC. Matt Kors talking to Martin Shkreli. Should watch that. They just filed bankruptcy. Good.
You're so annoying. My career, you're destroying.
But now we're back one day ago. Not a lot of stuff coming out today. By the way, what's up with TREY? Somebody needs to check on TREY. 5 days ago, 6 days ago now, his last video. What's up with TREY? Maybe he put a post. Oh no, definitely not. The breakout scenarios. That was the last thing. Right. Well, well then, shall we? Well, I suppose. What's going on, guys? Welcome back to another video. In this video,
What's going on, guys? Welcome back to another video. In this video, I got another very important AMC update to bring
very
all
important.
of you this evening. So what we're going to be covering in this update is a little bit of some good news that we're seeing with the market and some of the bad. Now, the good news actually relates to AMC, the company specifically, which is actually pretty good to see. We're going to be going over the technicals on the AMC chart. Obviously, we're going to take a look at ORTEX and the Max Payne. We're going to be going over some box office numbers as well, because those are really heading up. And then some very interesting things happening in the streaming industry, specifically with Netflix, how they are laying off employees and losing subscribers. But
let's just skip to the ORTEX. Just skip to the ORTEX.
Bullish momentum. And when we come over and take a look at the short interest data right here, 18% live estimated short interest as a percentage of the free float.
Well, we can't really see that, dude, because it's cut off. I've literally been saying this for a year now. Why do you cut off your goddamn...
Again, we're seeing some nonsense with ORTEX. I'd like to see what happens with this going into next week.
Oh, yeah. If return shares eclipse borrowed shares, it's nonsense. Right? Because they can't be covering. There's no way. There's no way that shorts have covered. The shorts are covering all the time, and there's no way that there was a lot of short covering last week.
Still seeing really high cost to borrow, 41.45% max, average 15.
Well, if it was 50% cost to borrow, it would be about 1.8 cents per day per share, according to my math. So, and that's if it were 50. It's not 50, and right here it says 17. I think. Yeah, 17.
0.71%. Shares on loans messing around a little bit over here. We were at 190 million. Now we're at 153 million. So again, wait until a couple...
Percent change, minus 19%. Wow. And the estimated short interest percentage of free float is now, we can see it here, 18.8%. Wow. Down 16.5%. Wow. Wow.
Couple of days in next week.
I think it would be great if it got down below 10%. What would the apes do then? And the price just keeps like dripping down.
Then we can kind of get an indication of what we're looking at there. Now, when we take a look at Max Payne here really quickly, again, 13 is going to be the Max Payne going into next week. Can it change? Absolutely. And in my opinion, Max Payne is definitely not what you want to be looking at to guide your investment decisions going into any single week, but it is something to keep a lookout for. Now, let's get into some of the good news with AMC here that we're seeing in the overall movie theater industry. So we just finished Q2, and right now, in terms of the domestic yearly box office, we're about 3.7 billion. Well, last year we did about 4.5 billion in 2021, a significant increase over the 2.1 billion in 2020, the year of the pandemics. We are seeing
no shit. I mean,
a significant rebound in the movie theater industry, which is really awesome to see. Now, by the end of the year, with some awesome movies coming out as well, we could see these numbers much, much, much higher than what we are currently seeing. Right now,
what about maybe twice of what it is now?
In a pretty significant way, I'd say if we were to track, we could end up seeing about 7, 8, maybe 9 billion in revenue in the total or in box office numbers for the total year of 2022, but it can always be higher. But looking at this right here and then comparing this to what the media loves to say as movie theaters' biggest competition, when we come over here and look at Netflix, is Netflix going downhill? I'll just answer that right now. Absolutely. For the second month in a row, Netflix has cut employees to manage company costs. Netflix will be laying off 300 workers from its staff, the Wall Street Journal reports.
I don't know. Everybody's excited about Stranger Things, the new season of Stranger Things that just came out. I don't see that playing in AMC theaters anywhere.
Be about 3% of the streaming services workforce. Why the cuts? The move was made to cut costs after the company reportedly lost 200,000 subscribers in the first quarter of the year. Netflix had expected to gain 2.7 million users during that time. So Netflix significantly missing market expectations and going downhill. AMC, movie theater industry, complete opposite right now. So in terms of the actual fundamentals in the industry, yes, it is rebounding. We still have a long way to go, but we are looking good right now. Now, we have to talk about what's going on, and this is kind of where the bad news part comes in. There is a light at the end of the tunnel. There is a possibility for some very interesting things to happen with the Fed and a couple of these other regulatory bodies as well. But I want to bring your attention over to a few things. First, Short interest as a percentage of market cap on the S&P 500 median has reached a 2-year high at about 1.7%. This isn't short interest as a percentage of the free float, it's short interest as a percentage of market cap. So it's a little different metric here, but again, we've seen a lot of data points like this in the past where short interest is very, very, very high. So there's a lot of money betting against U.S. equities right now. Why is that? Well,
why?
When we come over to this article here, this is probably...
That's odd. I mean, why would anybody be betting against the market right now? It's so strange. Oh, but Zero Hedge will tell us.
The most important thing that we need to talk about. Now, we made a video about this a few days ago where the Atlanta Fed came out with their expectation for Q2 GDP at -1%. This was on June 30th. Now, they've recently come out again and basically said it's going to be even lower. So the continued erosion in economic data has prompted the Atlanta Fed to slash its forecast for Q2 GDP growth to -2.1%, meaning the U.S. is now technically in a recession after Q1's confirmed 1.6% contraction, meaning -1.6% yesterday. The GDP Now model estimate for real GDP has collapsed in recent days. Growth in the second quarter of 2022 has been cut to a contractionary 2.1%, down from 1% negative on June 30th and down from 0% on June 15th. So you can see how fast these estimates are moving down. Now, what does this mean for us? Well, there's a couple of things. Remember, the overall kind of macroeconomic environment right now, we have high inflation, and in terms of monetary policy, we are seeing the Fed start to increase interest rates in order to try to slow down inflation. They're also trying to sell off their assets that they have right now, the balance sheet runoff, and nothing is really seemingly working to get inflation under control. Now, when the Fed raises interest rates, it does a couple of things in the overall economy. It basically inhibits growth. Now, with what we're seeing here with the GDP numbers coming down, heading into a recession, the Fed still wanting to increase interest rates and inflation not really going anywhere, they have to make a decision. Now, again, we do have to talk about the business cycle here as well, in terms of GDP right here. So we're looking at a peak recession, depression, trough.
Is he going to say that the Fed might loosen again? They might...
Recovery and expansion.
Wow.
That is essentially what the business cycle is. So all of these moves that we are seeing are cyclical. The market cannot continue to go up forever. We do go into recessionary periods, and then we come back up. The real question is how low is this drop going to be? Is this trough going to be all the way down here? Is it going to look something like this, where it comes not necessarily below this line and comes back up? Well, we're still waiting to see. But...
Hey, Manny.
Here is where the light at the end of...
Tell everybody where you are. Tell everybody what you're doing.
The tunnel comes in. When we look at what we have just said in terms of inflation is still high, the Fed is raising interest rates, and what they're essentially doing is not letting that growth come back out in the overall market. We've talked about this a few times, but we're now seeing some of these reports coming out on CNBC. There's a very high chance that the Fed ends up cutting rates towards the end of next year. Originally, this estimate was actually, I believe, in 2024. So they're trying to pull things back now. The comments come amid growing concerns that both the U.S. and Eurozone economies could be facing a recession. The Atlanta Fed's GDP Now tracker now points to a 1% contraction for the year. Now, this came out earlier than that -2.1%. So now, even after that new data came out, we could be seeing potentially rate cuts even sooner. So we have these different metrics going on in the market right now that are honestly very confusing and almost opposite to what should be going on. So the powers that be right now, whether it be the Fed or whether it's going to be the ECB or whether it's any one of these other regulatory bodies, they have to make a very important decision here. Do they care about GDP, or do they really care more about getting inflation under control? Now, the Fed has come out and said that one of their main mandates is price stability. So that's going to have to do with inflation. Now, if that's going to be the case, we probably won't see rate cuts. But at the end of the day, if we continue to see declining GDP, that is a very significant problem. And that is not going to really encourage anybody to put money back into the United States stock market right now. So these are things that you guys have to know if you...
Well, I can't help but, think that smart investors are going to buy up these things when they're at low levels. So, what's the problem? I don't really understand. But anyway, Antoinette is going to piano class. Manny is at an AMC sitting next to the silverback, Adam Aaron himself. Antoinette's on their way to piano class. So when's that recital anyway? You gonna live stream it?
You have money invested in the market right now. You can't just go in throwing willy-nilly money at stocks all the time. There are very, very specific things that you need to understand about the overall
Except AMC.
macroeconomic environment. We have high inflation, declining GDP. We have a Fed and a Fed chair that nobody really thinks is capable of getting these things under control. So we are in for a very, very volatile, I would say, next year and a half or 2 years.
It was last Saturday.
With decisions on what the Fed is actually going to do. So we're going to keep updating you guys as these things continue to come out. But that is going to wrap up this update. So
thank God. Okay. All right. So what do we get from that? ORTEX short interest is down. In fact, we just look at it here. Model 3 dude is at the beach at Hotel del Coronado. Oh boy. Am I the only one sitting at home? Lynn might be. Good. I'm glad it went well. So this says 14, but we saw 16 on his update there. Shares on loan and free float on loan went down by almost 20%. Estimated short interest went down by 16.5%. Days to cover is down. But, you know, this is weird stuff going on with ORTEX. Short interest walk down while unused shares being returned. 14 to 16 million unused shares returned when we saw this happen throughout the week. Right? Particularly Monday. But, you know, you saw it pretty much most days. Friday, quite a bit. Also Thursday, also Wednesday. So, not really that weird. Obviously short covering. So, let's see what we got here. Time for one more video before the futures market opens. Guess we'll do Commander 35.
Well, hello there. How y'all doing today? What's going on? Getting ready for the extended weekend. Stock market's going to be closed, I assume, on Monday, tomorrow.
I assume.
4th of July.
It doesn't even look like HD, so.
You know, I hate that shit, honestly. I wish we could just keep going. You know, imagine that fucking stock market open on 4th of July. That'd be pretty fucking lit. But anyways, have to just suck it up and deal with it. So, as you see by the title, what this video is about, no bullshit, and gonna jump straight into it, which is, what if AMC does not squeeze in July? What if my time frame that I have fails? What if the time frame that many other people out there have held very near and dear to themselves and really truly believed in fails? What if it never comes to fruition at this particular time? Well, I'm not going to dodge that question. I'm not going to dodge or try to avoid talking about this because, you know, this is pretty significant to me whether or not this does occur right now. You know, I'm constantly trying to figure out and calculate what is happening, when it's going to happen. It's in the back of my mind because it's a lot of money at stake here. You know, there's potentially 6-7 figures on the lines for many people here. So on what the potential reward of the payout of the squeeze, obviously, right? So here's my honest thoughts on it. I, first of all, still firmly believe that we're going to squeeze within July. I
knew he was going to say that.
frame, which was between
so the question
June
was,
and July.
what if it doesn't? And, you know, of course, he still believes
Now,
that it
June
will.
obviously is
Okay.
no longer relevant. That's redundant. Throw that out the window. So now we're shifting into July.
It's not redundant. It was wrong. But,
So there are many things.
hey, Tanko Native. I saw your video earlier.
That
Good
could
stuff.
happen here still. We have a long month ahead of us here. So, gonna watch it very closely, and we're gonna see what's gonna happen. If I'm wrong, then I'm wrong. If everybody else is wrong, it's just the nature of the game. You can't always be right. There is never 100% likelihood that something is going to occur no matter what, or the exact way you can foresee it happening. Like, for example, we could have a massive run. We could shoot up, who knows, 30, 40, 50 bucks, whatever, right? But that's still not the actual squeeze, obviously, right? There are a lot of variables. Things may not go exactly according to plan. And I know that, and I factor that in. And the way I'm looking at it is that there's, I would say, above an 80% chance that the squeeze is going to occur this month.
Okay, we're going to hold you to that, buddy. Above an 80% chance that the squeeze is going to happen in July. Despite everything that Short the Vix just said, the economy is in the shitter. Okay, I will remember this.
Pretty high percentage for me, I would say. Maybe you'll disagree. Maybe some people will say it's less than that. Maybe it's a 50% chance. Maybe it's
I mean, you're not basing that on anything. What's the justification for it?
higher, 95% chance. I'm going to say 80% chance.
You're just
I
pulling
would
that
say
number out of your ass.
Now, there's still that 20% chance it does not occur. But if that happens, if nothing occurs, you know, we go up, we go down, we kind of like stagnate, consolidate. It's, you know, bouncing around up in between the teens, the 20s, 30s. Nothing really, truly amazing happens. Nothing is going to change for me. I'm still going to be holding my position.
Oh, okay.
All my shares. And also another thing.
So it doesn't matter if it squeezes.
I am no longer going to consider day trading AMC. I never have before. I have said in the past, which I'm sure some of you will remember this, that I was considering day trading AMC if this time frame failed. I said this months back. And after all this time, I thought about it and really considered it. And I was like, no, it's not worth it. Because then, usually how like shit like this happens, when you go to start, when you make a last second decision like that, you get upset, you make an impulsive, emotional decision like many people out here do. They succumb to their emotions. They sell out. The moment they fucking sell out, shit goes to the fucking moon. That's one reason why I decided I'm never gonna do that. For two, I will lose.
Who would want to make money?
All
You know, who would want to
fucking
make money? Where's Chris at? Chris, you're doing the wrong thing there, buddy. You know,
potential
making
tax
money.
savings.
How dare you?
You know what I mean? I'll lose the long-term capital gains savings. That really is, especially nowadays, how taxes are built to utterly brutalize you. Anybody who has money, they'll like rob you basically for pretty much half your money, especially if you're doing short term. I want to preserve that for as long as humanly possible, so I will keep holding that. 3, it just seems to me to be immoral. Now that's just like a personal thing. I have nothing against others who
Immoral.
necessarily who do
So now there's morality in the stock. Okay, whatever.
trade it, like nothing
Jesus
personal.
Christ.
I think it's actually a wise decision to make as much money as possible, because I believe you should always focus on yourself and your family before others' thoughts and opinions about you, because then again, this whole thing is about making money to begin with, right? This is the whole source why we're all here. The only reason we're talking to each other, that we know each other, that we became acquaintances and friends, is because we all want the same thing, and that is money. That is it. So whoever does,
Well, that's not true. that's not true, then what about all the no sell nonsense? You know, clearly it's about changing the system. And Antoinette, see you later. Enjoy your piano class. Immoral. Yes, immoral. It's that new kind of electronic morals. Yeah.
Against them personally. But I've decided I'm not going to, and I'm going to keep holding my position if we do not squeeze.
Why do I feel like he's like straddling a fence here? I don't know. He's tiptoeing around, straddling a fence. Weird.
July. And I'm just going to let it ride. At that point, I don't think it will be possible to predict or put a time frame on when this specifically which month the squeeze, or around like the specific quarter of the year the squeeze is going to occur. I'll have to do a more in-depth video about that later, but it could be, I would just call it like the Wild West at that point. It could be any time after that. It could happen a few days later, couple weeks, couple months, could be a year later. I don't know. So,
but 80% chance it happens this month.
Yeah. I just wanted to give you my honest thoughts and opinions. Either way, if it happens, it does not happen, I am not going to sell my position. I'm going to keep holding with everybody else who is holding. I'm going to wait the storm out with you. But I still firmly believe that it's going to happen in July. Still. And until I'm proven wrong, until that is completely off the board, I am sticking to that, and I have a lot of confidence and enthusiasm about that occurring. But
yeah, sure again, seems like you do.
I'm not going to get emotional about this, whichever way, which I believe is the wrong way to go about anything in the stock market, any trades at all. Never be emotional, because your emotions is what gives the enemy power over you. And do not let the enemy, which sometimes can be yourself in your own mind, do not let your mind be manipulated by the others on the other side. You have to master your emotions, and I believe I have as far as that.
Yeah, right.
I'm strong, I'm firm.
Why do you talk so much about the ape father?
Gucci. All right, so I'll be
yeah, garbage. Let's see, we got about 15 seconds here until the futures open. So let's switch over there. All right, here we go. And they're off to the races. Here we go. There it is. So let me pull up the schedule here so I can get this right. But basically, this is like any other Monday holiday schedule for futures. But just to specify that, so obviously the market just opened. So just pulling that up here. We have the market opening now. Now, some things go until different times tomorrow, but basically the market will be open until sometime tomorrow, and then it will close, and then it will reopen tomorrow evening. So that's the same as all of the other Monday holiday weeks. So the futures market opens because this holiday is not observed around the world. So the market opens, it closes for the regular session tomorrow, which everything's closed, and then it will reopen in the evening. So yeah, here you go. I just got a notification on that up there, but of course it's cut off a little bit because I have the screen cropped a little bit. But Yeah. So it looks like, yeah, it's pretty close. So where I guess where I was going with that is the volume is probably gonna be light. It may not really be a good indication of anything what happens tonight, because we have no market tomorrow. Tomorrow evening might be more interesting. So just not a lot of expectation here. Just curious to see what's happening. In any case, so all right, well, pretty flat so far. We have crude oil up about 0.2%. We'll come back to this. We'll let it cook for a little bit. Come back, see what's happening. Let's see here. So where is Frankie? Well, I don't know. I don't know. So the last video that he did, looks like he was at the golf course. I call it the golf course. It looks like he's at a golf course pro shop or snack shop or something right here. Commitment to AMC short squeeze play. YouTube content creators, AMC bigums.
Hey, what's up? This Frank. Man, I want to respond to this question. Will I stay in AMC short squeeze play if we don't squeeze in July? Naturally, man, I would love for us to get our money in July because we've been in this a long time. But let me just say this, man, because I've heard some people say that if we don't squeeze in July, they're going to get out of the short squeeze play.
I don't know who's
and
saying that.
I get it. I'm like Tupac, man. I ain't mad at you. You know your situation. You got to do what you got to do. But for me, yes, man, I absolutely would stay into AMC short squeeze play. If we don't squeeze, man, in July, I'll stay in the play. I was always taught that commitment is doing what you say, doing what you say.
I know he's at a business. I know he's somewhere at a business. I can see a reflection of an exit sign right here in the TV. I believe that's what that is. It's an exit, red lighted exit sign. But I can't really tell.
That you was going to do long after the move that you said you was going to do it in is gone. See, it's difficult for a lot of people to stay motivated and stay committed to the AMC short squeeze play because we've been in the short squeeze play for so long. Some of us a year and a half, some of us a year, some of us longer than a year and a half. So we've been in the play for so long. So it's difficult for us to stay motivated when it comes to this short squeeze play. So you have to figure out a way on how to stay motivated.
Got to figure out a way to stay motivated.
What's going on with the short squeeze play and how to convince yourself, man, that you're not going to quit. And that's what it's going to take. And see, my thing is, I know when it comes to this short squeeze, but I know when it comes to short squeeze plays there is no time limit. And I've said it in my other videos. There is no time limit to a short squeeze play. A lot of people say short squeeze plays take a year to pop off. So this particular short squeeze play is a short squeeze play that we've never seen this type of short squeeze play before. We're not just dealing with billionaires, a billionaire business owner when it comes to this short squeeze play. This is a short squeeze play in which retail made a decision.
This is a short squeeze play from hell.
With some market makers, hedge funds, short sellers, and banks. So you got to look at the people. We went to war with the most powerful people in our financial system. So considering the fact of who we're at war with, you should think, man, that it's going to take longer.
I don't know, Manny.
When it comes to our short squeeze play. But the reward is going to be great. The harder it is, the greater the reward. So for me, I'm going to stay in this short squeeze play because the short squeeze play still looks good to me. However, I do think that they've been secretly covering just a little bit.
Oh, yeah, it is.
But I just think that we ain't been seeing no rise in the price action.
There you go.
But I think that they've been secretly covering just a little bit. You see what I'm saying?
Well, it's no secret. Not a secret.
I think the numbers are skewed. whether it be fintechs, ORTEX, or whatever. I think all that stuff is garbage. I think all of it's skewed. I think it's fabricated. I think it's just one big lie. I think the price, everything that we see about AMC is a whole big lie. Think about it. Why would they give us the truth and good information when they already desperate? They already don't have no money. They lost against us a long time ago. So why would they give us good information? Why would they give us the truth? So I don't believe any of the information that they put out there. And I want to say this too,
Good
man.
God.
Look, when it comes to...
Yes, Model 3 dude. Thank you. Thank you. Look at the charts and you will see the covering. Absolutely. What do you think this is? What do these people think that this is? People just randomly decided to buy on a random fucking Monday. What do you think this is? What do you think this is? What do you think this is? And you could correlate this to the overall market too. It happened across all stocks, pretty much, or the indices. So yeah, you can see it. You can absolutely see it. And as I've been saying, the short covering is the only significant buying pressure that AMC sees. It's just that simple.
YouTube content creators.
Content.
That deal with AMC. They're very important because they keep us motivated about staying in the short squeeze play, and they inform us about what's going on. And we got a lot of content creators that got hard. A lot of hard. You see what I'm saying? But have you ever noticed you got some content creators, they never talk about one percenters. They never talk about the devil. They never talk about short sellers. They never talk about hedge funds. Although these are the individuals that's using illegal naked shorting. These are the individuals doing criminal activity in the stock market and engaging in class warfare in the stock market. These are the individuals that's keeping the meme stock short squeeze play.
Class warfare in the stock market. No, I think that's what you see. I think that's what you guys want to see. But I don't think, now I could be wrong, but I just don't think that they care. I don't think that anybody cares. I think they care about making money. I think that's what market participants in general care about. That's what I care about. So, yeah, I watched Tanko Native's reply to this video earlier, and I thought it was really good. But let's just keep going here.
From running, they the number one villain. But there are some YouTubers, if you notice, they never talk about it. They'll talk about other content creators, but they won't talk about them. You know why? In my opinion, I think because they're afraid to. You see what I'm saying? They want traffic to their channel. They want views, but they don't want to take time. They don't want the consequences when it comes to talking about 1%ers. See, it's consequences when you talk about these kind of guys. You see what I'm saying? These are some of the most powerful individuals.
Oh, what consequences have you faced? I wonder, what consequences has he faced for talking about the 1%ers and his 3,500 subscribers, to his 3,500 subscribers? I wonder when AMC Bigums is going to enter this conversation here.
In the financial industry, they can do a lot of things. Who knows what they can do? Man, they probably can go so far as to, when you're trying to sell off your position, mess around while you're trying to sell your shares. You don't know, man, what these guys can do. Because if you on YouTube, you talking about them, it's their job to know who you are. They know who we are. They know our names. They probably know where we live at. They know our account position. They know everything about us. It's their job to know. We're at war with them. So why wouldn't they not know? So the thing is,
well, do you know where they live? Do you know their address? Do you know who they are? Because mostly these people just say they. the hedge funds, the 1%ers. But why? It's just nonsense.
A lot of people are fearful when it comes to talking about the 1%ers. But here's how I feel about it. Man, you can't be fearful when you see people out there doing things that's harmful to other people and they engage in their criminal activity and is wrong, especially when you involved in it. You can't be fearful. The stock market is supposed to be a place to where you can go to, where a company, it's supposed to be a place where a company can grow and build wealth. And as individuals, we're supposed to be able to go to the stock market, invest in the stock market, build generational wealth over time for our families.
Well, that's not a short squeeze. So what are you talking about here? You want life-changing generational wealth instantly. That's why you're in this $1 trillion short squeeze play. Now, all of a sudden, it's about building generational wealth over time. But apparently you can't do that either. What is this guy talking about? This is just incoherent nonsense.
But man, if you got a group of people, whether it be the 1%ers or whoever, if you got a group of people,
and you're in a bear market right now, so either learn how to trade that bear market, which I think is extremely exciting, and it takes a little bit more skill, but it's more interesting than a bull market that just goes up. You can learn how to trade it, or you can just sit on the sidelines and wait for, some kind of a bottom and buy, your long-term holds. What's the problem?
That's using the stock market for class warfare and try to crush everybody, be it people or businesses, for their own personal gain.
That sounds like what the apes are doing. He's another one, another hypocrite. The only people talking about class warfare, my friend, are you guys. And it's a false narrative. It's absolutely a false narrative.
You can't be afraid to speak out on it. I'm sorry, man. You can't be afraid. You see what I'm saying?
He's not afraid, at least.
My thing is, man, you got a few YouTubers that I watch all the time that I feel like, man, they not afraid to speak out against the establishment. They not just going to do videos if they disagree with another content creator. They don't have a problem, man. They're not afraid to speaking out against the 1%ers or the establishment. And some of those individuals,
God,
man,
he hates the 1%ers. I mean, he was the one who started saying 1%ers. That sounds like class warfare talk to me.
Wall Street.
Jesus.
Mr. F. Spaghetti, Al from Boston, Feel for Real, Ape Nation Will, Common Sense Investor, AB Investment,
Exactly.
John Wick Sniping, Jay Ingram, Boss Blunt, Teddy Zane, and AMC Biggums. These guys I know, man, they not afraid to speak out against the 1%ers. They not
exactly,
gonna just do
Lynn.
a video.
The 1% are already at the top. They don't need class warfare. So what is he talking about? It's just garbage.
And just talk about a content creator that they got an issue with. If the 1%ers doing something wrong, they ain't afraid to speak out against it, and I like that. But man, AMC Biggums, man, I got to give you a special shout out. I got to, bro, because man,
here you go,
where
Lynn.
you get your passion from or where you get your drive from. But man, the things that you talk about on your channel, it's people don't
pretty much
even
always wrong.
think about what you're talking about. Nor less talk about what you're talking about on a YouTube channel. You see what I'm saying? Man, the things that you expose when it comes to the criminal activity and the negative stuff, man, that's going on, and all the dark energy, man, that's in our financial system. Hey, man, you a hitter. Man, you got a heart. So I got to take time out to give you a special shout out. And plus, man, I pray, man, that the creator of the universe, man, always stay with you, man, and keep you protected, man. But keep on doing the work that you got a passion to do, man. But I like the content that you put out there. I got to give you a special shout out. But look, man, in order for us to get paid, we just got to stay committed. We got a diamond hand.
Stay committed.
Just hold the line.
Diamond hand.
Simple as that. Just have a little patience,
diamond
man,
balls.
and we're going to be good. And I want to thank you for taking time out to watch my video and enjoy your holiday weekend. Have a nice day.
All right. Yay. So yeah, we're going lower, pretty much. A little bit, not much. 1/4%, 1/8%. Again, it's super light volume. Super light. So it may not even really matter. But interesting to look at nonetheless, right? Okay, so I don't know why you asked for that, but hey, I aim to please. So you asked, I delivered. If backpedaling counts as heart, he's got it. Diamond brains. Diamond brains. Diamond gallbladder. Okay. Stock plit, September 1st. I guess that's supposed to be stock split. Here, okay. The judge forcing Moass. I got to see this. What's going on, guys?
Wait, they're trying to toss the SEC market manipulation suit? Check this out. Bill Huang asked the judge to toss the SEC market manipulation suit. And the Archeo's capital management founder Bill Huang offered their most forceful defenses yet for one of the biggest meltdowns in recent memory on Wall Street and urged a federal judge to dismiss the Securities and Exchange Commission's claims that the investment firm manipulated the stock market.
Okay, how is this forcing the Moass? God.
So one thing that we want to say, right, is we know that not just one broker or not just one hedge fund had to do it, right? It was multiple, because one hedge fund doesn't have that kind of power. Unless that hedge fund...
but unless that hedge fund is who? Citadel?
It's multiple, because one hedge fund doesn't have that kind of power. Unless that hedge fund, let's say, is a market maker, is a hedge fund, has a dark pool, right? There's a lot of things that could be going on.
Yeah, right. Unless they're Citadel. Because that's the evil boogeyman.
A lot of conflict of interest that I guess only the apes see, and everyone else just thinks it's normal.
Right. Only the apes see it. Yep. Grandiose narcissism. Fuck me.
But to understand that they're trying to drop everything from a lawsuit or drop everything from a manipulation suit, right? And you're
I guarantee you, if your ass got sued ever for putting out nonsensical bullshit every day, like judge forcing Moass, if you got sued, my guess is you would ask the judge to dismiss the case. I guarantee you would. Your lawyer would anyway. You wouldn't know what the fuck to do.
Judge to toss it. Why? Right? It's either you have huge proof against you, or you're losing money, right? And you're losing clients, and you know that you're wrong, but you're just trying to get your name out of there. Now, I'm not saying that Archeo's capital had anything to do with it or didn't, but one thing I want to say, guys, is that a lot of these hedge funds they're trying to play the victim here, right? They're trying to play the victim and act like they are right.
They're trying to be like the apes, then.
It's completely the other way around. The family office said in a filing on Tuesday that the SEC's case was unfounded because the regulators' allegations were based on the actions of brokers, right? But the biggest
you got to scroll down when you read past the page break there, kiddo.
Here, guys, is that it might have just been the brokers, right? But the brokers also have to connect with, let's say, people like market makers, right? And market makers and hedge funds over leveraged. So trust me, right? Even if Archeo
they over leveraged. They love to say that too. They over leveraged.
A lot of these companies.
That's what the apes did on AMC.
They start falling one by one. They know that at the end of the day, they might have little or something to do with it, right? There's only one way why you're clearing your name, and sometimes not even...
because you don't. Oh my God, he's got to be like 16 years old. He's got to be. Let's see. Now or never. Let's see if he was going for. It's now or never.
Well, guys, first of all, I would like to point out something. Currently, there are plenty of short squeeze plays on the market. And there is an old quote saying, if you cannot beat someone, you either join him or you distract him. Think about why we didn't have any other short squeeze plays on the market, on the news. People talking about it, people investing it during the last 11, 12, 13, 14 months. Sure, we have BBIG from time to time, right? Sure, some people talk about DWAC, But this was like a single individual cases, not really attached to the meme stock rally. They even tried to make Robinhood after the IPO meme stock. Remember this, right? Unsuccessful. But the point over here is that now you have Revlon, now you have the Redbox, now you have other short squeeze plays that are always in the media. They always point out, they always try to compare with AMC, with GameStop. Sure, I might be wrong about this, but I assure you that this is kind of distraction. Kind of, you know, drawing the volume out of AMC or GameStop, something that you can definitely see. Sure, when you have a pumps, 3, 4, 5% pre-market, and then during the interday 10, 12, 15, 20%.
How does he get so many
Of course,
views on
you
his
will see a lot of
videos?
volume. You will see 60, 70 million. But remember, even the latest run-ups, the last 2-3 weeks when AMC was up 15%, the volume was 70 million. Something that I point out. I'm always pointing out that with a very average volume or little above average, we're having amazing gains. Something very suspicious. Also, other point I would like to make is that Revlon is a company in bankruptcy procedure. Something that we saw last year with Hertz. So these companies could be compared, but they cannot compare a company who filed for bankruptcy with AMC or with GameStop. Companies that are actually buying, acquiring other companies in the industry, right? Reinvesting, you know, making more and more revenue quarter over quarter. And another major news over here is that if there are other short squeeze on the market, you know, having
it is
at
all
least similar
clickbait.
or greater opportunity
There's
to make
nothing.
profit,
There's nothing to
why
say.
you would see a video like I made yesterday, pointing out that institutions are keep buying like crazy on AMC. You saw that, right? Pure numbers, everything. It's hardcore data. Sure, they could profit from the lending, but even if this is true, even if they're buying the shares just for the single reason to lend the shares,
There's not even there's not even an article in here. He's just talking all over the place.
You can judge in your own way, but in my opinion, it's a bullish news. Even negativity.
Okay, what's this bullish news?
For work, just to make people to sell, which again, it's a bullish news. Every news.
Oh crap!
And remember, nobody asking investors in this other short squeeze place to sell so hard as much as they try to ask people in GameStop and AMC.
Nobody's
to sell.
asking people to
Variety of
sell
ways.
though.
Either
What are you
company is
talking
dead,
about?
Business is dead. The investors are stupid. The investors are fatigued, right? Every single day they're here. They're showing up for work just to make people to sell. Which again, it's a bullish news. Every news. You can
Every
judge in
news,
your own way, but in
all
my opinion,
news is bullish. That's what he's saying.
it's a bullish news. Even negativity.
Even negative news is bullish. Everything's bullish, right? Like just like Tanko said, everything is positive, no negative, all good, no bad. It's not possible. Not possible.
The reason that they're paying so much attention to the sentiment, to the way people behave during the daily price action is too bullish, because they want to know exactly what people think in every single moment, and they feel weakness when they feel that, you know, let's say Alameda says something very questionable. Let's say, you know, the management made some weird decision to invest $20 million in commercial or something, you know, questionable.
Something on
AMC
screen.
and the way how media
Oh,
actually
yeah.
interpreted the
This
news
is bullish.
about, you know, Wanda has to pay AMC $17 million, right? But the news about this is
Wait,
written
that's not
in a
true.
way. And I can give you a very, very recent, fresh example. The recent tweet from AMC and the way how media actually interpreted the news about, you know, Wanda has to pay AMC $17 million, right? But the news about
Well,
this
that's not exactly it. That's not the whole story.
is
But
written
okay.
in a way in which all the apes asking what this news actually means. Is this means that AMC has to pay $17 million? You understand? The whole sentiment and narrative, it's always pointing
See, they
with the
don't know what it
sharp
means.
part towards AMC. It's not like AMC is doing stuff. It's like people or the economy or other companies are doing something to AMC, which again, mind games at the highest level possible, guys. As always, guys, you're more than welcome to leave your thoughts in the comment section.
Oh, let's look at those comments, shall we? Hard to believe in this market, no short squeeze plays have hit since January. Ask why. The economy is the economy in dumps yet and liquidation issues, yet no runs and no margin calls. It is a suspect and criminal. Distraction for sure. AMC and GME are the real problem for shorts. I am holding, but I wonder if it will ever squeeze at this point. I think it is cheaper for the hedges to pay the interest than pay for the squeeze, so they will just keep kicking can down road. Hot diggity. Tuesday, I'm buying another big round of AMC shares. I'm happy. I dropped 20K on AMC this month. Very happy the shorts gave me a discount. They may simply be buying to keep the facade going that this is a real stock market, so that when AMC goes down at their loss, they can say, see, it all makes sense, just like we and our media said. Wow. So many conspiracy theorists. I'll just keep buying more AMC shares regardless of price. Well, clearly no. Clearly you're not. Yeah, everyone gets an award in their world. There's no first, second, or third. Big money taking all their money off the table. 20K, yeah, that's 20,000. I mean, if you're, you know, if you can actually believe that, but can't wait to push that ever elusive sell button. Never again will I dabble with this criminal syndicate. Okay. Would like to see the numbers on DWAC compared to other stocks. Retail was pushing to see why it ran, or was it just allowed to run? How many shares was sent through the dark pool in the wholesaler side? Now know they have infinite liquidity. Sent through the dark pool. You know why it's sent through the dark pool? Because you use a payment for order flow brokerage. That's why. So stupid. Yes, thank you. These people are fucking nuts. Fucking added, you know, I added that for emphasis. The only way AMC squeezes is if a major market event causes margin calls / mass liquidations, or AMC gets acquired / merges. Sumner movies are hitting left and right. Breaking above 20 and 30 is doable this summer. Squeezing back above 70 into the 100s isn't currently on the horizon. I don't care to read all those replies. If we all have to wait 12 or 3 more years, it's all okay. Because after that, we know we will all be. I mean, these people, not only are they nuts, they're idiots. I mean, I'm holding my bags in AMC and BBIG. Well, at least that's an honest statement. They smell of desperation. Hold apes for as long as it takes. I ain't gonna live forever. Let's see. It's now or never. Come hold me tonight. Elvis. Yep, that's what I was thinking. 1960. 1960. Elvis. Yes. Okay. Lovely. Check in on the futures market. Well, still kind of drifting down, right? But pretty much, pretty much flat. It's just The volume is so incredibly low, which we knew it would be, but it's an excuse for us to get on and talk about this stuff. So, all right. So yeah, so TREY, no video in 6 days now. Does anybody know his Twitch address? Twitch handle? Maybe he's just been streaming video games, but is Jim Cramer a plant? I mean, the AMC breakout scenarios.
Technical standpoint, from a chart standpoint, from a couple different standpoints, and I'd like to focus particularly on that. So we're going to talk about what it would look like for a continuation of breakout, particular levels that you could see.
Okay.
See it along the way, and what the worst case scenarios would be. So before we get into it, guys, we're going to trade stories. We're going to talk fast and those classic. I'm going to find so please don't do this. Let's get into the video. Today, I had a lot of people ask me, Trey, how did AMC have the move that it did? And there was a couple different answers. You know, some people said it's because hashtag Ken Griffin lied was trending on Twitter. Some people said it was because that one goofball, what was his name, Assman or something? You guys know what I'm talking about, Cliff Assman. He went on mainstream media and said that he's short on AMC, about 0.16% of his portfolio or something. Some people hypothesized it's because the GameStop report came out. But the truth of the matter is, it's because I drank water.
So this was from Monday. And the truth of the matter was short covering. Not that he will say it.
Nah, but from a real standpoint, the reason why you got this move today is quite simple. You had a technical breakout. Now, it's quite simple. It's great to teach you how to connect dots. And that's what you do in this situation. You tap it, you tap it, you tap it. You get at least 3 taps, and you draw a line connecting all these different touch points. And you can see that today, it officially broke through this falling level of resistance that has spanned all the way back to March.
You know what? You know what makes stocks break through resistance, falling resistance?
This
short
is
covering.
This is actually a very similar setup to what we got way back before we had this massive run up to $34. And ultimately, you're waiting to see if it is going to replicate this again. So that's what we're going to be talking about today.
I got the answer for you, Trey.
Replicate that run up and maybe even get something better than that, because it did end up falling just short of what I would consider to be the holy grail trend line. Now, if you want to draw these on your own, I already showed you this one. I have another one right here, and this is what I'm waiting for a break on. And you're connecting these dots. I am on a log chart. Keep that in the back of your mind. You can do this on TradingView
because that's what the pros use.
Going to the bottom right of your chart, clicking log. You tap, tap, almost tap, 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 and then a tap. And a break above this is going to be quite critical. So that's another line. And then the grand finale line is this one. Tap, 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 right? Just this falling trend line right here. Now, there's a couple different scenarios that I've got drawn out, and today, by the way, was a picture-perfect breakout. And the reason I say that, you know, quite simply put, is you had the volume to follow through with it, right? You get this bowl out, it's consolidating, consolidating, consolidating. Volume increases as it breaks out here. This is beautiful. This is exactly what you want to see. You want to see volume increases off of a technical breakout, which is what we got, right? Going into tomorrow, into the rest of the week, I want to actually see a situation that's very similar to right here, right? So what we got back here is a breakout from this falling trend line. It lasted about a month or so, 10 February to about 22 March, about a month and a weekish. And it broke this trend and moved up to this trend line and then flagged out for a while before breaking above that, right? I think that this is the best case scenario. What happened? Well, if you look at the RSI, which is the relative strength index, it gives you an idea of when things are overbought or oversold. This purple trend line right here, you can get this by going to indicators and turning this on your own TradingView chart, or Webull, or Thinkorswim, whatever you use, right? It tapped out at about 86 and then dropped back down about 50 to then get another massive run up to about $34, right? This consolidation of this bull flagging, this falling resistance, rising support, flag out pattern that you got off of that nice move was the consolidation of the cool off and breathing period that Amy needed to get that nice push to $34, right? I want to actually see a replication of that, and that is what this white trend line represents right here. Now, today, I tweeted out that I believe Amy is going to come up to about 1450, 1460 or so, and that's what this yellow circle represents.
What
and
you want to do.
That we need to break. So here is the flag out opportunity, right? It would look something like falling resistance, rising support, continues to bounce back and forth until you eventually break into the upside. This would be the best case scenario, right? Is that going to happen? Can't guarantee it. Could, might not. Worst case scenario is this
Who does he think is doing all this buying? Like, seriously, who does he think is doing all this buying? Let me clean this up a little bit here. Like, who did all the buying on Monday? you know, from what? From $12.30 all the way up to $14.74, 4, something like that. You know, interesting that it stopped there though too. Yeah, there it is. Volume was 77 million. And then it dropped right back down to 39, 27, 25, 30. Okay, Trey.
Reject here, and that is possible, right? If you look historically at every time that it's tapped this trend line, the last time that it did, way back in May, it rejected.
Maybe. I'm just saying, we haven't heard from him in 6 days.
Back down, and this is when it hit about $16.50 or so. So it could tap this and reject and come back down. That is an option. This is I mean, you can see it, right? This has happened in the past. So we have to keep that on the table. If that happens, I think that AMC, over the period of a couple of weeks, would return back to this rising trend line to keep respecting this pattern. And that is why I said about 12 bucks or so, right? That'd be the worst case scenario for Amy right now. But there is a beautiful one. The white and the green lines represent a true breakout, in which case you're looking at sort of two big spots, right? I'd be watching for about $16.50. And from there, the real opportunity, the touch point and the tap at the Holy Grail trend line. Now, is this going to happen? I don't know for sure, right? I can't guarantee you anything. I think if the SPY is green, this is going to influence this pretty heavily. If the SPY is red, it's going to be very hard for AMC to get some strength in its sales. It needs a strong market to sort of back the moves. And if you don't believe that, all you have to do is look at the SPY run that we got over the last couple of days, which allowed for this to happen in the first place. But there is also a second piece of this. And that is the AMC historical implied volatility. Now, this is something that I've discussed quite a lot in the past, and it's the idea that AMC's historical implied volatility has been overly juiced for some time. And what I mean by that is it goes through extreme periods of high volatility, and this is how options are priced in on any given day, calls and puts. I didn't realize I was frozen. At this point, I'm into whatever.
Oh, wow. I thought it was my connection, but it wasn't. It was his connection.
Just keep going. Nonetheless, implied volatility is how options contracts get priced in, right? And they're priced based on two key factors. And one of those factors is volatility, obviously, and the other is what people are willing to pay for both calls and puts. So if you have a lot of people buying calls, historically speaking, call price seems to stay high.
There's like 6 or 7 variables in the Black-Scholes formula, dude. And implied volatility is not really one. Implied volatility is calculated off all the other ones. So no, it's not. It's not right.
To stay high. It's all about supply and demand.
The biggest determining factor is the underlying stock price. Yes, supply and demand for the option contract does play into it, and that's basically what influences the implied volatility. But time to expiration, I mean, the strike price. That's an oversimplification.
People are buying your supply, keep the demand high. People aren't, you lower the prices. And what you'll notice is every time options volume dries up and there's less calls being played, the historical volatility tends to drop. Well, you had a huge period of that, and then today...
Wait, is he talking about historical volatility or implied volatility? Because he said historical implied volatility, but he's looking at IV30. But then he said historical volatility. So those are two different things. Historical volatility is actually what it did. Implied volatility is what the market was projecting. The volatility of the market was implied by the option prices. So I don't know. Who the fuck
would
knows?
Be an uptrend of that overall historic.
Doesn't matter. He's full of shit anyway. Right? Oops. Oops.
I'm going to show you what that looks like, right? So if I come over here to my tweets, you'll see that I tweeted this out here today. It looks something like this, right? It's respecting some sort of triangle pattern, tap, tap, tap. From here, I'd expect a decent sized push up. And if it breaks this top trend line of historical implied volatility, which is how options price, it's how expensive calls get. Excuse me.
What the fuck is he talking about?
The overall price of the stock. That would be a great overall sign, as this typically moves alongside volatility, right? This is market makers' way of protecting themselves, so to speak. So why did that happen in the first place? Well, number one, volatility decrease, and number two, there was a better overall balance in call to put premium. What that means is less people were buying calls, and there was an overall better balance. And why that's important is because it wasn't necessarily a great time to buy calls. You see, timing is everything. I've mentioned this before, I'll say it again. Buying calls isn't bad. Buying calls at the wrong time, gambling calls, losing money on calls is bad. If you use the tool incorrectly, it's not a great tool. If you use the tool properly, it's a fantastic tool. You can get some nice moves. Well,
oh yeah, you could tell us about that. You could tell your viewers about that, couldn't you? Like to the tune of $1 million, huh, pal?
This is certainly a time in which implied volatility would lean towards saying, hey, over the next couple of weeks, you're going to expect that implied volatility will tap up to the top of this trend line that I just pointed out to you before, which is here, right? Tends to do that. It'll tap here, and then it'll come back up and tap again. So I'd expect a decent-sized push off this. This does look pretty good. This is a nice pattern. It does look solid, and you did get a technical breakout to match it. And if everything goes square, right, $29, $30. If it breaks,
okay. Let's see here. Oops. Gotta do this. Come on now. Yes, AMC. So, current IV percentile, 26%. 26% of the time, over the last 1 year, implied volatility was lower than the current level of 143.39. What does it tell you? It tells you that implied volatility is currently high. This was Friday. 239,000 calls traded, 88,000 puts traded. Total of 327,000 option contracts traded. I think we looked at this the other day, but let's see. It was the first. We'll look at the actual option chain on Friday. So yeah, just looking at the volume, look at this pathetic volume in the money. Pathetic. And once you get down to like 10, it just totally drops off. And then it ramps up at the money. And then once you get out of the money, that's when the really, the shit starts. 46, almost 47,000, 14 calls, 15,000, 1450, 12,000 15s. I mean, and I'm not even looking at the open interest. You got open interest of 11,000 20s, 8,400 25, 12,827 calls. I mean, only one 2750 call was traded on Friday. I want to know who did that. Who did that? Now, if we look at July 15th, these options go up to 145, and you have 160,000. Well, Friday there was 160,000 open 145 calls currently. If we go back here and look at it, it's probably going to be the same because it hasn't updated. It won't update until Tuesday morning probably. 160,000 145 calls. Yeah, cool. I don't know. That might be one of the last option chains that has 145s. Because if you look at August, it only goes up to 25. How ridiculous is that? The monthly options for July go to 145. The monthly options for August go to 25. Now, what are we going to deduce from that? Well, probably ain't going to 145, but that's just Kind of common sense. Okay. Whoops. I didn't realize that actually. 145 in July, 25 in August. That's actually really crazy. And then September, these are probably a quarterly, so they probably go higher. 50, or not a quarterly, 50. They go to 50. Then we don't have November yet, or October, but we have December. They go to 35. January is probably going to go high again. Oh yeah, 145. But January 2024 only goes to 90. Cool. God, look at a waste of money. How many collective millions have been lost on these options? I don't even know. I calculated a one-day loss of about $5 million in premium. A one-day loss from Thursday to Friday. This was last fall. Crazy. Okay.
Here at about 1460 or so, this is what I would watch for over the next coming weeks, right? It's definitely possible. It looks fantastic. This is a great setup. And the only last thing that I would say, right, to keep an eye on is volume, right? Volume is good. Now, how are you going to know if this best case scenario, like the white line or the green line, isn't going to take place, right? You can't have fake outs, for example. If you see it push to the upside, but volume continues to fade down, probably a fake out, right? There's not a lot of strength in that move. Why I said today was a clean breakout is because the volume here was high. You want to see that volume high and following through with the overall move, as that'll indicate that buyers are stepping in to sort of match the move. The algorithms, the institutions, the hedge funds, the market makers, the U's, right? The me's, the everybody's. This is the fucking move. That's how you know, right? So you want to see volume following through on that. Last thing I'll say is if we get this white pattern, what I'd really like to see is a fade in volume followed by the push up. You want to actually see a fade in volume when you're flagging out in a bullish situation because it shows that there's not enough sellers to push price down. It's essentially buyers, psychologically speaking, waiting for the next move to see if there are going to be sellers stepping in. If there's not, well,
what buyers
to push things up?
What buyers are you talking about, Trey?
Should be waiting for
the fuck.
So I
okay,
actually want to see
short,
that. Don't be
short
scared
covering.
If you see volume decreasing. If we get a consolidation period, that's normal. It's actually a good thing. That does indicate strength in the overall move, and I'd be quite satisfied with that. So those are the different situations that I see. The worst case is this is a rejection. You replicate this move, in which case I think it's going to come down and test $12 over the coming weeks. The best case scenarios is white flag out pattern, which is very similar to what we saw back here in March, right? Flag out before a huge touch point up to here. And the best case is that it comes back up to this trend line, $28, $29. And I've said this before, I'll say it again. If you break that trend line, that's the holy grail. That's the 1450 of back in May of 2021. That is what will initiate a squeeze. You will get a big move off of a technical breakout like that, and it would look pretty nasty, pretty dirty. This looks very...
This run-up was caused by short covering. How is that going to cause a fucking squeeze? Get real, man.
What we saw back in March of 2022.
Get fucking real.
I can't guarantee you anything, right?
Yeah, no shit, you can't.
The implied volatility is nice and low leading into this.
What?
The technicals look good.
Well, I guess we were looking at Friday.
The potential's there, right?
He needs to learn about it, IV percentile. Wow, that was garbage. No wonder he hasn't shown his face in 6 days. Jesus Christ. I wouldn't either if I said that shit. God. What a joke. What a joke. Okay. Oh, I think we had some videos posted over in Telegram earlier. So let me check it. Let me check over there, see what we got. Let's see. Frankie Muhammad, we looked at that. Membership perks. I'm not sure who this is. Looks kind of weird though. Oh.
101, the Wolf Pack. We got some stuff on the channel now. We got an elite membership package that when you're talking on chat with me in the mornings, you come up an elite member. You get an identification badge.
That's what I want.
You get special perks. The perks are the second package that you can do live video chats once a week with me. You can I'll call you up. You can give me your phone number. It's through WhatsApp, and we can talk about market stuff.
Oh, the choice of scammers
in general.
Are you kidding me?
More with the channel and myself, and you guys keep it real. Over and out.
All right. Okay, Cameron. And I get shit for using Telegram. I get shit for using Telegram. Let's see. Yeah, they think the run-ups are margin calls. I mean, Trey said it's a technical breakout. Now, I'm not sure what he means by that, or what he thinks he means by that. But when you have what you call it, the short interest data indicating shares returned. Of course, the apes think that those shares that are always shares returned when it's a big number. It's unused shares, so they borrowed them and held them and didn't short them. Okay, whatever. And out of the opposite side, out of the other side of their mouth, they talk about how high the cost to borrow is. So, figure that one out. But you have clear short covering patterns on the chart, and the short interest data showing shares returned. Let's see. Well, we would be looking at Wednesday if we want to look at Monday. So that would be the 29th. SI still being walked down before the run. Walked down. 13 million shares returned. That would indicate Monday right there. The short interest was still 20% then. And then by Friday, we got SI walk down while unused shares being returned. SI at 18 with another 14 million return. What about on the 30th? SI being walked down and lots of borrowed and non-shorted shares being returned. How do you know that? 14 million shares returned. SI is 19. So, ORTEX guy, clearly these are not unused fucking shares because the SI is going down. 20.3, 19.01, 18.09. So why are you sitting there saying that these are unused shares? How's the SI going down? You're a fucking shill. Or an idiot. Or both. That shit pisses me off. Literally everything this guy says. SI being walked down. Lots of borrowed non-shorted shares being returned. Okay. SI lowering that was artificially held high. What does that mean? That means that they were covering then. If the SI is going down, Jesus. It's just so disingenuous. There's really not a lot of stuff coming out these days. Today. Robinhood and AMC. Robinhood and AMC just flipped on Shiba Inu coin. What? Okay. Well, let's do China Judgment Day and AMC. I've been wondering what the hell he was going to say on this.
What's going on, my silly little motherfuckers? All right, listen. Feeling better, relax. I'm good. That's why I took the time to just, like rest the head and everything like that. I got this fucking ear here like pulsating. Like I'm like, holy fuck. But other than that, I mean, like, it's just the side of the brain, but it's good to go. Moving on. All right. Couple of interesting things because, I scan a lot of the news and stuff like that.
Yes.
And I look at things from a different perspective of just like, I love the way, like on the street, everybody tries to give an air of confidence. Like, well, our firm is strategically placed. Our investments will guide us through the turmoil. I just see that bullshit. And I'm just like, you motherfuckers have no idea what's coming. And
oh, I'm sure they don't.
It's funny because, like, I can say that because since I already swam in those dirty waters, I already know what that is. I know, give the air of confidence. Your investors are watching. Hold the line. Let me tell you something. You already got you already got some key people in the UK already raising the alarm that the Asian market, China market, you know, Chinese market. Chop, 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 Lou. Fuck you. No, fuck you. Anyway, the Chinese market, they're saying, is a couple of weeks away from basically crashing, which is funny because I've been saying that in August, the Chinese market is going to collapse. Like, just like in America when they were saying, there's no recession. And I'm like, dog, we're beyond the recession. Now they're saying, I think we're in a recession. I'm like, trust me. This is beyond a recession. Like, this is like if you were to take the word recession and just like extend it, like recession, like that. It's beyond that. I said it the other day. It's literally like a social interruption, and what we do during that social interruption, you know, the supply chain, the food, everything like that, what we do with that, you know, near fireworks in New York City is just whatever. There's gunshots and fireworks. You take your pick. Whatever suits your mood. Here's my thing. Chinese economy in August will start to fucking melt. It will disintegrate like there's nothing those motherfuckers can do. The funny thing about that Chinese market melting is that a lot of these funds and banks are invested into Chinese investments. Remember, you know, at a certain point, it was like the executive order, you know, these Chinese stocks, you can't use them as collateral. Dog, let me tell you something. Everything is going to melt from that side of the world, and it's going to suck these motherfuckers in. So on top of all the things that we got going on here that's basically triggering the AMC Judgment Day for us, then you got China about to fucking melt.
Don't forget about those F sharps.
Now, I don't think people understand. On one side, they're going to melt. Deflation, they're going to have to raise massive interest rates. It's going to be fucking crazy there. But then people are like, why is everybody going to the gold back yuan and the digital yuan? It's because they already know it's coming, and they're transitioning out of the regular yuan and normal economy where everything was bubbled up like Evergrande. Nobody living in those buildings except for seagulls. And price of seagulls like $900 a pound now. But now they're shifting over to the digital funny money. And guess what we're doing? Same fucking thing. So get ready, motherfuckers, because we're going down, they're going down. The EU is already doing their digital currency. The UK is doing it. Everything's going down. See, but China is the interesting one because they're vulnerable as an emerging world leader superpower. You get it?
Oh.
Like, the BRICS are vulnerable because they're trying to do something that might not jam in the long run and a turbulent society. What's holding them technically all together is they're saying like, fuck America. And America's about to go, we'll put a boot in your ass. It's the American way. Why? Because here's what happens. There's one thing that people still get by aligning more towards America than to the BRICS. And that is, they already know how fucked up America is. They kind of know it. And then all deep down, the Americans at the end of the day will still strive for freedom, liberty, and everything while we're engaging in the nefarious shit all around the world, which, by the way, the American people don't want that. It's just, it happens. But the BRICS is an unknown alliance, and China's involved. What's to stop them from going through a fucking scorched earth campaign around the world saying we're going to take natural resources, gold, water, whatever? What's to stop them if you adopt their currency, move forward? So anyway, people say, what does this have
In
to
other
do with
words,
AMC?
Judgment Day.
Look, motherfuckers.
Okay, what does this have to do with
Judgment
AMC?
Day. I didn't want this to happen.
There you go. Yeah, exactly. What the hell is he talking about?
One mountain is crashing into the ocean and another fucking one is rising, and we're like trying to balance.
He's bullshitting
out
of. He's just bullshitting.
Trigger these motherfuckers next door, which is the funds, to turn around and have to just sell off, cash out, try to survive. So just want to tell you, is big picture.
They have already sold. That's short selling. They. Why would they have to sell? What are you talking about? They're sitting. Jesus Christ.
That it will induce AMC. So we're like, but I'm not selling and they're not buying. What's gonna happen? Judgment Day. So hope that kind of helps spin the wheels, right?
Yeah. If he asked AA for the share count, I think he would probably have security sick. He would have security on his ass. He's not taking any chances with those mentally ill apes. But I need to see the proof of the share count. Without proof, you're just saying it. I have to disbelieve you. Robinhood canceled the squeeze. Is this long? No. Okay, good. Before. See what this weird ass futures market is doing. Oh, look, it's coming back. It's bouncing back. Holy shit. Yay. And it's bringing oil up with it too. Well, sweet. That's good. All right.
In today's video, I have a major update for AMC stock regarding what Citadel and Robinhood did. And guys, if you own AMC stock, you need to watch this video. Before I begin, if you like AMC stock, be sure to smash that like button.
If you like AMC stock, hit the like button. Okay.
A few seconds.
That's not what the like button's for.
Appreciate it. Also, be sure to hit that subscribe button if you're new so you don't miss out on future videos. Keep in mind, this is not financial advice, and this video is only
for I'm going to go ahead and give you financial advice anyway.
Be sure to do your own research and verify the information yourself, as I'm not a financial advisor. Now, guys, I do want to quickly mention for a very limited time, our channel sponsor is only a...
Jesus, fuck.
It's just published a one, but guys, I want short, so let me read it and then tell you my thoughts and prediction for this upcoming week. So the article is titled Robinhood and Citadel colluded night before.
Now this is this is from Frank Nez.
The stock moved up over 7% on Monday and then started to trade generally sideways until Friday. And as we know, the stock market is closed until Tuesday. But today, guys, I wanted to share a very shocking post regarding Citadel and Robinhood.
Shocking post.
This post explains
why
the squeeze was actually supposed to happen in 2021, but was cut short. So let me read it and then tell you my thoughts and prediction for this upcoming week. So the article is titled Robinhood and Citadel colluded night before trading restrictions.
Where's it posted?
The U.S. House Committee on Financial...
Oh, fuck you. You're not even going to say where the article exists and who wrote it? And they didn't just publish a press release. I mean, they...
Services just published a press release stating
that
they did it on a
holiday
fucking
weekend.
Engaged in blunt negotiations before the trading of meme stocks occurred. The press release states that talks regarding lowering PFOF payment for order flow rates happened just a night before trading restrictions.
Yeah, we knew that. We've known that. That was in the goddamn lawsuit that got dismissed with prejudice last year.
The
we know this.
GameStop report issued by the U.S. House Committee on Financial Services greatly details how the NSCC saved Robinhood from defaulting due to failing to meet collateral obligations. This article is going to highlight key points relating to meme stock halts that occurred in late January of 2021.
They're still stuck on this bullshit.
The GameStop report highlights
most of the apes now were not even involved in anything in January of 2021. Most of them weren't. They weren't affected by this. They got in after.
Liquidity.
namely in May and June.
The conversations between Citadel and Robinhood and the process leading to halting of meme stocks such as AMC and GameStop. On January 28th of 2021, Robinhood routed orders to 6 market makers for equities: Citadel Securities, G1 Execution Services, Morgan Stanley, Two Sigma Securities, Virtue, and Wolverine. Citadel, Morgan Stanley, and Wolverine are short on AMC to this day. The conversations...
Yeah, there needs to be a source for that. Where's the source? I actually commented on this post and asked him, wait, what is the source for that? I doubt that my comment will even be published because he doesn't like dissenting opinions or people asking for things. I was hoping that you were going to ask. I was going to ask for an autograph to Scott, but hey, at least you tried, Manny. I appreciate that. He's lazy. He's a lazy asshole.
Between Robinhood and Citadel were tense as the two negotiated the price of PFOF rebate rates and price caps for AMC and GameStop. Furthermore, guys, Robinhood received a massive wave.
Okay, but that's not the same as talking about restricting the trading on it. It's not. Talking about negotiating the price of payment for order flow rebate rates and price caps. I don't even know what that price caps, okay. Probably doesn't even say that in the report, but negotiating the price of payment for order flow, that's not the same as saying, oh, we need you guys to turn off trading for this. That's not the same thing.
Of its deposit requirements.
And then why does he keep harping on this?
DTCC, and according to the report, without this waiver, Robinhood would have defaulted on its regulatory collateral obligations. NSCC officials say the waiver was necessary to avoid systematic risk to the market. They explained that the extraordinary spike in meme stocks contributed to increased clearing fund requirements for several firms. Brokers halted the buying of AMC, GameStop, and other tickers when short sellers began to close their short positions, causing share prices to skyrocket. The halting occurred due to a lack of liquidity where certain brokers were unable to cover the minimum collateral requirements. The DTCC waived a total of $9.7 billion of collateral deposit requirements on January 28th of 2021. Retail investors feel they were robbed when brokers took away the buy button by restricting trading in AMC, GameStop.
Well, actually, no. I mean, you weren't robbed. If they had stopped your ability to sell, maybe you could say that. But again, it's in the terms of service that you agreed to when you signed up for your account. It says they can restrict trading on any security for any reason. It says that. A lot of people didn't know about it. I didn't know about it, but I looked and it's there. It was there then. It's still there. But, you know, Antoinette's got a good point here. None of this has anything to do with the squeeze. It doesn't. It has nothing to do with the squeeze. This is part of what I call like the social wrap of this, the social, you know, outer coating of this thing. It's designed to get people emotionally charged, emotionally heated, and to restore a little bit of their conviction, remind them as to why they need to keep holding. That's all this is. This is inconsequential. I mean, it is definitive. They have said, nobody, let me just back up just a little bit. Nobody has said that what Robinhood, nobody except the apes has said that what Robinhood did was illegal, shouldn't have been done. They didn't get in trouble for doing it. They didn't get fined or anything for doing it. It was well within their rights to do it. So what's the big fucking deal? There is none, except Frank Nez is a clickbait artist. He's a grifter who's putting out non-financial advice, giving entertainment to entertain you while your portfolio is bleeding out like somebody stabbed on the street.
Other meme stocks. The DTCC jumped in and saved Robinhood from defaulting, cut Citadel's losses short, and prevented retail investors' bets from reaching maximum potential. No one has been held accountable for these actions, primarily because the system is justifying the actions as
but not every brokerage restricted trading on those stocks. Not every brokerage did. Only the payment for order flow ones. So what is the... Again, it's just like when these guys bitch and complain about orders, quote, being routed to sent to the dark pool. That's because of the brokerage you choose to use. I don't understand it. It's just wanting to blame other people for mistakes or things that you didn't know about. And it's like, okay, yeah, sometimes you screw up. Sometimes you don't know what's happening. And you can learn about it and avoid it next time. But like, what is the point of this? There is no point.
Collapse, but the system stole from retail investors to save institutional investors.
Right,
Regulators intervened to save institutions while they capped retail investor gains. Still, hedge funds lost billions of dollars during the process. GameStop.
But why can't you say that regulators intervened to cap retail investors' losses? Because if people had bought, the price is going to collapse anyway. The price was going to collapse. It always does on these short squeeze spikes. It was going to collapse. So maybe you could look at it like they saved people from buying at the top, which is always a dumb thing to do. I don't know, because they're choosing to look at it this way.
Broke Melvin Capital.
And Lynn's probably got a good point here too. Robinhood had a halt. They didn't have liquidity to pay out other withdrawals, which would have been illegal. They had to protect all investors, not just AMC. And at the end of the day, we've talked about this numerous times. Businesses, Robinhood's a business. Wall Street is a business. All these brokers, it's a for-profit business. They're for-profit entities. They're there to make money. They're not there as a public service. They're going to care about their bottom line, number one, just like any business is going to do, period. That's the nature of business. Okay.
The hedge fund was not.
The apes have no business sense whatsoever, not even a hint of business sense.
Able to recover from its massive losses and has now shut down. But Citadel nor Robinhood have faced any severe consequences that money can't buy them out from. Retail investors are now looking at our government and regulators as complicit to fraud and market manipulation.
Oh, okay.
Wow, guys, so that was just eye-opening for sure. The fact that they did this just shows how much control and power
this is not news. There's nothing in here that was news. There's nothing in here that we didn't know last fucking year.
And market makers actually have when compared to retail investors. I'm definitely not happy that they deliberately took away the buy button to prevent stocks such as AMC from reaching its true potential. After all of this was over,
that's not its true potential, though. You exploited the system. The apes did. The apes exploited the system. They made a short squeeze, which, by the way, is illegal. Nobody wants to admit that. Oh, it's our right. No, it's not. Actually, it's not your right. It's not valid. It happens, yes, but you're breaking the law. So what the fuck?
They were slapped with a small fine that they were most likely able to easily pay off. Now, as far as this upcoming week is concerned, I would like to see AMC continue the momentum from last week. But
the best you're going to do is write this off as a learning experience. Consider it your tuition for learning. And the bigger your loss, the more hopefully that you learned. And that's kind of how at least how I look at losses. It's the best way to do it. Spin it around, turn it into a positive.
I do think we may end up seeing more sideways movement for the next few days. Now, guys, do me a favor and drop a comment and let me know. Do you think AMC could have gone higher in 2021 if they did not remove the buy button? With that said,
it doesn't matter. That is an irrelevant question. That is an absolutely irrelevant question. Wow, there's hardly any real comments anyway. Okay. God, there's really shorts caught manipulating ORTEX. Okay, All right. LAGhacks.
All right, guys, I'm back with your
Whoa.
next week update for
Whoa.
AMC. Just want to go over everything that I think will be happening with AMC, what my thoughts are, everything you guys should know before I go ahead and jump into the video. If you guys could go ahead and hit that like button and subscribe to the channel, would really help push out this video to other investors on YouTube. And considering...
Yeah, right. Of course. All right.
Commenting AMC down below would really help push out this video to other AMC investors. Now let's go ahead and talk about some stuff here. So first things first, I want to go ahead and compare and contrast
So this is old.
Friday versus Thursday. So what is exactly happening in terms of the short score? So this is actually the first day where the short score has gone down, right? Friday was 78.85. Thursday comparatively, the short score was 79.06. So why exactly did it go down? It's coming down to the estimated short interest percent of the free float. It's actually currently 18.8. And a week ago, it was 22.51. So it's down 16%, which is kind of a red flag for most investors because AMC really hasn't moved positively, right? But again, we know a lot of this covering happens when there are vulnerable spots in this dark pool cycle. So especially the rolling 20-day position, whenever it starts going positive, it starts...
That's bullshit.
Getting vulnerable, right? This is where they can
totally made up thing.
Easily cover without having a major...
There is no dark pool position.
...impact on the price. But with that said, the price for short volume, they're still going to be paying major interest. As you guys take a look here, we have gone up.
Short volume is irrelevant too. Short volume is
okay, but we're still below zero. And as long as this graph right here stays below zero, the cost to borrow average will go up exponentially. And just to compare and contrast here, the current cost to borrow, that means cumulative across all AMC shares right now, they're paying an average of 17.06%. And just a week ago, it was 15.25. So this change is actually positive. It's up 12% over the week. And this number has been going up every single day. This number will continuously go up until they actually start covering. Keep in mind, they are playing some games here because they do have a lot of shares in reserve.
He's literally showing you. Oh, my God.
If you just take a look at the current numbers, they have 18.8% of the free float shorted, but they have 30% of it on loan. So they still have
and both of those numbers are down double digits. Why aren't you talking about the relevant changes here, bro?
Can use as ammo.
Oh my God.
But hopefully that does not scare many people because we know these shares are just accounted for shares. We know a lot of the fakes.
Oh, here we go.
They're still paying that major cost to borrow on them. I mean, getting 17% average for your AMC shares is quite impressive.
Dude, if this cost to borrow is 50%, that's 1.8 cents a day. So 17%. I mean, you're talking fractions of a cent.
That's just free interest tracking while you wait for the short squeeze. I mean, it sounds like a pretty sweet deal to me. So that's what we have over here. Now, looking at these numbers, what I find really, really interesting is a negative cost to borrow minimum, which means they're literally paying you to short AMC across some platforms, which is absolutely messed up. This should not be existing for any stock whatsoever. Imagine you're shorting a stock and getting paid to short that stock. So let's take a look here. This is probably mostly done by brokerages that are also short AMC, which really should not be the case. You know, brokerages should be very neutral when it comes down to stocks.
Brokerages
so the fact
are
that they're
shorting
giving you
AMC?
money to short AMC
really?
Shows how desperate a lot of these hedge funds have become. So I would really not be focusing on this number because because literally every trading platform that you're looking at, they're not going to be paying you to short AMC. This is probably done across one platform, and that's why ORTEX has to account this number. But this is literally illegal, so this should not even be a thing.
Illegal now. It's illegal. Okay.
Looking at is the cost of our average being 15.7%. But keep in mind, we're actually higher on the cumulative scale, which is very interesting, right? Because previously, if you go ahead, just go to Thursday, again, cost of our average was 16.91.
You're talking about literally hundredths of a penny.
The minimum
difference
average over here was 22.34. So
I mean, 25% is less than 1 cent per day. It's like 0.9 cents per day. So
reached a stage where they're actually paying more on all the shares accounted for AMC compared to shorting it right now. But I think this number is actually going to move up moving into next week. 15.7 seems a little bit low. This is probably done with the manipulation on the negative 0.975.
Manipulation.
This right here is pushing this number down. This really should be closer to 20%. So when we focusing on that, maximum is sitting at 41%.
Talk about the return shares,
basically more than.
Shut the fuck up about
AMC.
this. Okay?
If they're long AMC, they'll go ahead, make your cost to borrow at more.
Oh my God.
It a little bit on the upside over here. They can go ahead push it like they did before.
They can push
make the short interest just magically go to zero.
Okay.
It a little bit on.
Did I skip it where he talks about it?
If they're long AMC, they'll go ahead, make your cost to borrow at more. If they're short AMC, they'll make it less, which is illegal. Should not be the case, but it's happening right now. Now, talking about the dark pools, what you guys really care about, right? As long as we stay below 0 on the price for short volume, AMC is going to continuously go up, and we're still below 0.
No.
The only way we go up, again, they can go ahead play with it a little bit on the upside over here. They can go ahead push it like they did before. But what they really did that was by returning a few shares, but there's still major short AMC, right? The cost of bar is going up. So the only way we actually pull up like we have done previously and AMC goes up is by covering, and they're not covering. So yes, they'll mess.
Well, you were just showing the ORTEX update that shows shares returned and the short interest down like 16%. So you're saying they're not covering, but the data points otherwise.
That's around the numbers here. But they can't make the short interest just magically go to 0. That's not going to happen unless they do some major covering, and that will push the stock price up. So right now, while they are reducing the free float successfully, they're really doing it just by manipulating other numbers, right?
What?
Short score has not really gone down. I mean, even with them returning a few shares, it went from 79.06 to 78.85. And this math is done accounting for every single number out there. And this short score has been increasing every single day. If you look at the weekly trend for the short score, it went from literally 65 to 78. So, yes, short score is increasing for AMC, and that's really all you have to look at.
Short score is fucking meaningless. If there is one number that is the most meaningless on ORTEX, it's a fucking short score.
It's a cumulative algorithm that accounts for every single number out there in terms of AMC's squeeze cycle. So, what we're looking at over here, the rolling 28 position, it's become
That's
positive
another
again.
chart.
Whenever the slope is negative for the rolling 28 position, it's a good thing for AMCs, right? Now the slope is positive.
There is no rolling
it's
28 position.
For AMCs. And again, this indicator gives you a short-term indication of what's going to happen with AMC, but long-term, that's literally all it's telling you, right? It can't really tell you much long-term. So what's very important is the price is still at about 13.53, hasn't really moved much. Rolling 28 position is moving within this channel right here. So it'll be interesting to see what happens once we reach this stage in this cycle. Will it continuously go up? That might be a bad thing for AMC. But if it goes ahead, goes back down, it's really just in a channel moving up and down. And likely we'll do that because, again, we're still below 0 here. We're not really doing much in terms of this graph. So rolling 28 position is not going to go bonkers and do something crazy. It's really not going to do that, right? So we're still bearish over here.
Yeah, it doesn't matter anyway.
I think it's pretty short term. We'll probably move back down, meaning the stock price will be bullish. So that's good for AMC. Now, for the price for short volume, they've really been manipulating this. Numbers haven't really been going over it recently, but let's take a look at what's going on here, right? Short volume percentage has been above 50 for the last 3 days, meaning covering really isn't happening. This is the actual dark pool numbers we care about.
Short volume. Okay, now he's talking about short. Okay, what? What the fuck?
Recently, but let's take a look at what's going on here, right? Short volume percentage has been above.
By the way, this is just off exchange. This is just off
for the last 3 days, meaning covering really isn't happening. This is the actual dark pool numbers we care about. ORTEX is looking at the clean numbers for AMC, all the accounted for shares. But when we look at this number right here, all these shares, short volume percentages are above 50%, meaning covering is not happening. So the last 3 days,
that's total nonsense. Total nonsense. Short volume does not equal short interest. It really has nothing to do with short selling. If anything, this is retail buying that is executed off exchange by market makers. I mean, seriously, this is terrible.
There has literally been no covering happening, more shorting happening, and yet you see the short interest going down. Just means they're playing around with the ORTEX numbers, really trying to make it look like AMC is bearish.
So shorts are not caught manipulating ORTEX. This LAGhacks is just making shit up
at this moment, but it's not. Short score is still going up because they cannot escape the cost of bar.
But you literally said that they're manipulating ORTEX data. So why would you believe the short score?
Even on the short shares, they're having to pay this average 17% cost of borrow because some retail owner actually owns those naked synthetic shares out there, and they still have to legally get that percent fee, right? Your brokerage has to pay that to you, and so they can't really escape this number. This is where I'm really focusing at. This number has been increasing every single day, so that's a good thing, right? That's really what's holding up this short score.
Bullish.
It's going to continuously hold up until they actually do some covering here. So, for example, the 40s, yes, that's some covering, but then they had a 60% day over here. So I really just broke every single 40% day. I mean, basically, if you just take cumulative graph over here, the average is going to be above 50%, meaning it's still net short, right? 51, 53, 50, 43, 42, but then you have a 67 day. So it's still above 50 in average. So they really have done no covering whatsoever.
Awesome.
Yes, the numbers will tell you there has been covering on ORTEX, but it's really not true whatsoever. Cost of borrow will continuously increase until they actually do some covering. So that's all I had for AMC.
Okay, I mean, there's so much misinformation in this video. It's really frustrating, but yeah. That short volume thing, wow. Where are our names? Right here. Now, I guess Adam Aaron was supposed to. He asked Adam Aaron to, write out our names or do separate autographs, but he didn't. So, but Manny tried. That's all that. Hello, all. Go AMC. Is that Adam Aaron? Does it say Adam Aaron? I can't really even tell. It's pretty scribbly. CEO AMC. That's awesome. Did he say summer is getting shorter every school day? Did he say that? Wow. Pretty cool. So this was in Miami, or where was it? Somewhere in Florida. That's pretty cool. Okay, let's see here. Now I've got a video. Let me pull it up and get the right timing on it. So actually, I know I posted it in Telegram. So there's a channel called Confessions of a Market Maker that is pretty cool, and there's a guy on there who is a former institutional trader, and it's just a really interesting perspective, pretty unique perspective into the market. So let's see. Just have to get to the right place in the video. But while I'm kind of looking for that, let me also pull up this other one here that was posted, because I didn't read it, or I didn't watch it. This one here.
Hello, everybody.
Whoops.
And welcome to episode.
We'll get to that. So Lynn said this dude is talking about Scotty Finance without talking about him.
Alrighty guys, so on to the next smaller video as I promised. Here's the thing.
Who's this?
Very important thing to talk about is also how I've noticed that they have been prepping the community for what they want them. They know that they can't mess with GME and AMC anymore. They've tried their best. The only thing that they could do is shake out, people who are recently just jumping in, or people who are not hip to these gimmicks before. Because nothing is new with AMC and GME. So nobody is really, as far as the sentiment, the overall.
Is that a Cincinnati Reds hat?
The majority sentiment in AMC and GME.
Where's that Chicago?
People are not worried. They're just eager to see their squeeze. And I personally think it's going to come. Nobody has a crystal ball to obviously tell anybody when that something is going to happen and when, because if it haven't occurred to you by now yet, you would be a fool to think that the hedge funds are the only ones who are in on this.
Okay.
And I'll let your imaginations do its own thing on that. If you don't agree, I respect it. If you agree, then you know.
Pretty sure that's a Reds hat he's wearing.
So with that being said, what am I noticing as of late and what they're doing, their new agenda?
I mean, I'm not even going to go through and count how many times that one video Frankie said they 78 times. This has got to be way more.
Since day one, I've said
their
agenda has been, how can we break that buy and then, wait for it, the hold. The hold idea is what, again, they've always been fighting, and that's what they're worried about, because they can't have a future in any kind of...
What? Okay, this is basic AMC narrative bullshit. Really not much reason to continue watching this. I'm just going to skip ahead on it.
Join Redbox. Are you kidding me? Are you kidding me? You think AB is popping up over here
that's
for now
what
about
a surprise.
4.5 months, making
what
videos
a surprise.
almost on a daily basis to upload it, talking about AMC and GME, putting out my own reputation, my own this, and I'm not enticing or encouraging people
Who
to
the fuck
buy
is
or
surprised
sell,
here?
but I'm saying my opinions. Do you think it's gonna take me 4.5 months to say my opinion? And because I want people not to see Redbox and Revlon, I want it all for myself, but I want people to get busy with something I don't believe in, I believe is a fake. What sense does that
Well, people made money on that shit, bro.
You know what? I really want to hold everybody that views or viewers, subscribers, whatever you are. You guys are at, it's you guys that are adding to this stuff. When clowns come out and start pointing fingers left and right, egging stuff left and right, you guys are egging that on. So
Okay, all right.
I would love from every community to actually start expecting a whole lot better from its whatever domain.
So now he's
content creator, that they're at least being
well, we're glad you're here, Chris.
Because you know, nobody's an advisor, a financial advisor. And not
Clearly.
a Trust Me Bro channel as well. So what's the best word to use here? You guys can put in the comments and help me with that. But like I said, the audacity of some of these creators, you guys, use your own judgment. When somebody's lashing out at somebody that has nothing to do with the mechanics, no other YouTube creator controls NASDAQ, dark pools, SCC. And yet when these clowns come out and say, oh, these YouTubers have been lying to us and all this stuff, like, come on. You have no content. You have nothing to talk about. You don't understand the market dynamics.
Oh, really? Oh, really? Okay.
Been in the whole
now I see what you mean, Len. Here he is talking about me without mentioning my name.
The market for a few months, probably maximum a year. Maybe you got enticed by the hype that happened.
You're talking about the apes. Plain and simple.
For AMC, and you just wanted to jump in. You really don't know freaking the market and shit. You've seen a couple of videos with people who are doing technical analysis, and now you know it all of a sudden. I mean, again, AB is not a dark person. I want everybody to live and have their life the way they have it, and how they want to go about it is everybody's God-given right. But when you have nothing to offer, please step aside and let the true information come out. Don't jam the hype.
Oh, fuck you. Fuck you. What a bunch of nonsense. Okay. B.HAYES. AMC game over or scam? All right, Model 3 dude. You asked for it. You also asked for Frankie, so 2 strikes, you're out, buddy.
Yes, sir. It's your boy B.HAYES back with another one, guys. So is AMC ever going to run again, or is it a scam? We know a lot of people is frustrated with this play now. A lot of people is becoming frustrated that wasn't frustrated, and they just want to know, man, is this thing...
Potato cam here. Much better.
Want to run again? Is it ever going to pop? Is it a scam? Did I lose all my money? What's going on? So let's go ahead and share, not my opinion, guys, exactly what I believe is going on, and if I believe AMC is a scam, and if I believe it's going to ever run again. So as we know, guys, AMC already had a nice run in it. Even though we should have ran way higher than we peaked out at 77. We know analysts and all that, they say it went to 72. But for the ones that been watching like a hawk, I know we ran up to $77 in the pre-market. So as we know, guys, that definitely wasn't, you know, the full potential of AMC. But we knew that this stock was manipulated, mass manipulated. Being for the fact that the big dogs, people that's really in control of a lot of this, Robinhood, Citadel, market makers, banks, a lot of these people was on the wrong end of the stick with AMC and GME, and they had to come in forcibly, take out that buy button, do all types of, you know, straightforward tactics of manipulation to save themselves. And by doing so, they also knew, you know, they thought maybe they could kill the play and die down after doing all that. But now the play is still, if not, got even stronger with the community and retail investors being attracted to it to make it squeeze and run up again. So they became even harder with their manipulation tactics and further manipulating the stock even more, guys. So we see exactly what's going on day in, day out, every single day. We steady getting it handed to us. As the overall market, you know, is getting hammered due to inflation. The economy is in a bad state right now. Meme stocks like AMC and GME should be soaring right now because they're not based upon the same things that these traditional stocks is looking for. They're looking for the economy to continue to spend money.
Let me stop you right there, partner. The old, you know, these stocks are different. You know, we're different. Well, that's not really true. We can see that on the price chart. I mean, it's kind of silly to even do this, but, you know, go to percentage year to date. It's down 48% on the year. Just for shits and giggles, if we switch over to the S&P, it's only down, I don't know why I have this here. It's only down 19%. What about GameStop? Okay, it's only down 19%, so that's with the market, but going back to AMC, %. I mean, it's almost been cut in half year to date. So, I mean, clearly,
with them so they can further thrive in business. But AMC, GME, these meme stocks, they're on a whole different ballgame than the overall traditional stock.
Well, nice edit.
Stocks, the overall stock market, the traditional stocks, looking for the economy to be spending as they was, spending heavily to continue to push their business up. But AMC and GME, of course, they would like for the economy to spend money in their business as well. But far as what we're concerned in, the stock price spiking, we don't need the economy for that to happen. AMC and GME is strictly prices done and seen what we've seen in the past, have done what it's done because of the retail investors collectively coming together, identifying the short interest in this security and attacking it, coming together and buying up the stock price and it's straight price action in a movement that created all of this chaos with this situation. So
okay, all right, I was trying to get him, you know, catch him on a break there. The problem with that, though, is how were the retail investors able to do that last year? Well, think about 1 year ago. You still had enhanced unemployment. You still had stimulus. You still had low interest rates. So, contrary to what he's saying here, yes, AMC, GME, meme stocks do depend on the economy, because that's what allows retail investors to buy the stock. Clearly, they can't do it now, or they're choosing not to. But if you look back at last year, you see the volume here. It correlates to the movement of the price movement, the price action. The volume trails off, and you don't see those types of moves ever again. So, you know, I don't know what... I mean, this is basic. So yes, it does depend on that. And you got 20 to 30, 40 million shares of volume on a day now. What's the average? TradingView says the average is 40 million. I mean, I remember when the average was 100 million last year. So, I mean, what the fuck?
Now it's making the situation, maybe it don't look like it, being for the fact of how much time and effort and money they putting in this to for the manipulators. But this time around, the second go round is more powerful than the first time around, being for the fact that all the squeeze aspects is there from the first go around. So with the squeeze aspects being there on top of the fundamental aspects now caught up and is doing 5x, 6x better than it was last year. We talking 5, 6x the amount of people, from 6 million to 30 plus million people that's entering in these theaters. We talking revenue increase by 5 to 6x. We talking about the shares out on loan doubling. So
now
since
fundamentals
last
matter.
year around this time. Last year around this time,
I thought it wasn't a traditional stock though. The fundamentals matter on traditional stocks, but not on these stocks.
77.
But now it matters.
In the pre-market, we had roughly over 100 million plus shares out on loan. Now we have roughly over 180 million plus shares out on loan, guys. Nearly 2 weeks.
Well, no, I mean, like, dude, shares on loan 153 million. I mean, it's come down 20% from a week ago. I mean, it seems like he's a little behind the curve here.
So things is basically 2x to 5x times better than it was last year with the same squeeze aspects.
Except nobody's buying the fucking stock. The only buying pressure you have is short covering. Otherwise, why is nobody buying the stock?
Still,
they're buying food. They're buying diapers. They're buying, they're paying their car insurance. They're putting gas in their car. People don't have money to waste in these bullshit stocks.
Lined up for us. So that being said, guys, I do believe AMC can run again. And also being for the fact that we're not at a spot to where we halfway between like that sweet spot, that 33 that we ran to when we was at 13 and ran at 33 in a matter of days, a matter of 13, 14 days. We're not in that sweet spot to where, we looking like we could possibly go back down to 11 or 10 or 8 from here.
No, actually, you're less than half
in
of that
the sweet
price.
Spot of having all this nice information boiling up that we didn't see the price reflection to just yet, while being at the bottom of our ladder. And what I mean by the bottom of that ladder is we sitting at 13, just came from 11, 10, then went all the way back down to 9, and we already came down and rerouted and revisited that whole
shorts covered down there.
Bottom. Meaning we know we can still go lower, but basically what I'm getting at is anything at this price is under 13, 12, 11, 10, 9, 8, 7, 6, 5, 4, whatever you want to do to, at least we know our bottom at. That's $0 and some cents, which I don't believe we're going to there.
What? Okay.
That's the thing. Anywhere between
weird
there
thing
and
to say.
here where we at ain't nothing but a load up zone for anybody. I'm talking institutions, big banks, everybody. They exchanging their Tesla for AMC because they know the potential and opportunity that's right there in front of them. This thing could easily get them 100, 200, 300% on their money just like that. It's going to take those other investments that they're involved in. It's going to take them years to get that return on their money. So the opportunity
no institutional no institutions are playing AMC because they think it's going to squeeze. Give me a fucking
clear
break.
As day, guys. We definitely see.
If anything,
AMC
they're buying it because of the index
skyrocketing, running back up from here, guys. Especially with the community still being.
Yeah.
strong.
How many times have you guys been saying? I mean, you guys have been saying that consistently for the last year and a half. How do you have any credibility? Seriously.
We still got to do what we're doing. I want everybody to know, like I've been telling you guys since the beginning, in a play like this season, a play like, people say, put everything online, it's guaranteed it's going to do what it do. Nah, this is a movement. This is a high risk, high reward type of play. So you definitely want to be very, very smart with your investment and not put
it's too late. Too late on that. Overhead supply. Exactly. I mean, these gray boxes correspond to high volume nodes on the volume profile. So there's one here. If you go out far enough, there's one down here. at this low level, but here, here, and here. And the red boxes correspond to, something doesn't look right about that one. I think the formatting got messed up. The red boxes correspond to, I think it's supposed to be that. Whatever. Low volume nodes. So low volume here, low volume here, low volume way up here. And I mean, I could have put one here, but it's not really that low, but you know, so that's what that means. So if you look, so let me turn this off again now that we know what this is. So you got a high volume area right here at this price level. And let me get it off percentage because it's not really doing anything for us. So what is this? 50, let's just call it 55 to 60. High volume. 35 to 40, high volume. Okay, these are people who are underwater quite a bit, right? 70% potentially, anywhere from 70, anywhere from, 60%, 70%. Some people are down even more. 80%. Solid percentages. Okay, and these people are still holding up here. Most of these people, a lot of these people, are still holding. So that is a supply. That is a supply of shares that is currently out there waiting to be sold. It's an inventory. And that inventory has a high cost. Okay, very high cost. So, it's not moving. It's not moved. What do you do when you have an inventory that has a high cost? You need to move that inventory. Well, you have to mark it down. So gradually, over time, what you see is you see this overhead supply, basically get marked down and sold off on every one of these rallies. So you have this run up here and you get sold off here, here, sold off here, here, and here, and even here. So that's the concept of overhead supply. There is a large supply of shares that is accumulated up here at a very high cost. And the owners of this inventory would like to move it. And it doesn't do any good sitting there. And at some point, this supply is going to be sold at a loss. And that's what's starting to happen. We know it's been happening. But that's the problem here. That is one of the problems. There's a major problem here. So thanks for bringing that up, Model 3 dude. I haven't talked about that in a while, but I think that that's something that I think a fifth grader could understand that. I really do. And also, while we're looking at this here, these zones, these high and low volume zones, I mean, I just want to point out a few levels here. Okay, so like here, 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 and I suppose this, but not really for what I'm pointing out. But a lot of the times you can use these zones as support and resistance zones. And that's kind of what we see here. We see it bouncing off these levels, kind of consolidating in some of these levels. Again, bouncing off these levels. So, it kind of speaks to the validity of market volume profile, charts, analysis, and just kind of generally being aware of what's going on in terms of, what the fuck? Oh, always does that. Stays on drawing. I don't want it to. Of kind of using this data, this information. It's telling you how many shares are bought and sold at these different levels. There's a lot of stuff that you can glean from that. And of course, right now, if we go back, let's see, we go back to, fall of 2020 and incorporate fall of 2020 until now. That's the composite volume profile we're looking at here on the right. This red line, let me see if I can make it bolder. Yeah. This red line down here, that indicates where the most trading took place, the price level of the most trading, and it's basically kind of right where the price is at now. It's in a $12 handle. So even with all of this price action, still the most trading took place down here, and that's because of this. It's because of this region right here. I would have to imagine. So if we come over here and kind of just reduce it before the run up. This is when we had 1.25 billion shares, 1.25 billion shares traded on this day here, and 500,000 and all this stuff. So you don't see these bars really changing because once you got here, you never got back to that price level. But there was way more trading that occurred here. So what does that mean? Well, you could say that it's getting back to kind of, its true value, in essence. That, this basically was not enough to bring this average up. Most still occurred down here. So is it going to bounce off here and shoot way back up? Probably not. Probably not. But we'll see. Every time there's any type of rally, which is basically short covering rallies, be better to look at this maybe on 4 hours or something. It gets sold off. Sold off almost instantaneously. So there was a lot of short covering throughout the market this week, and AMC saw that too. Monday, I think there was only one day where it went down pretty much. Every other day you had a lot of short covering. So anyway, let's see what's going on over in Thinkorswim. Well, let's see. I wonder if there's any other markets open. So we got VIX futures creeping up, of course. So I like to use tradingeconomics.com for a lot of the commodities prices, stock futures, and international markets. So is it actually up? Okay, all right. I was going to say should be updating. All right, so yeah, we're in pre-market session, they call it. Let's see what else we got. Nothing open yet. Oh, usually I do these streams later, and well, I guess not on Sundays. Anyway, whatever. We'll see kind of what happens. But this is a good one to use, tradingeconomics.com. Another one is investing.com has, the thing I like about this is real-time futures prices. So they're not delayed. Of course, they're not delayed on Thinkorswim either. But it's, I just like the trading economics look better. So I tend to use that one. Okay. Let me see if I can get this section of this podcast here.
And
Let me see. I got to get it queued up here. 1 second. Okay. Okay. All right, here we go. Okay,
and so you know, so JJ,
so the guy with the ape avatar is JJ. That's the former institutional guy, and then this dude Ray here. He's the podcast host. It's worth checking out. It's really an interesting perspective. I really dig it. I've been following this channel for about a year or so, and it's just good information. So Ray's going to ask about macro stuff and news, and I really like the response that
we've had a lot
JJ
of
gives.
like global headlines and events going on this year.
Oh yeah.
And you know, I know back earlier in the year we had a few of like those like macro guys on the podcast.
Yep.
And you know, just from having them on, I started, I guess, paying attention a little bit more. Not that I haven't paid attention to like macro events, but I never really I was more of like block the news out and just trade, which I found out I should always be that way, because I started trying to and not like really trade off of the, but maybe use it to see like, okay, maybe like I should stay away from this sector. Maybe I should pay attention a little bit more to this sector. And I'm sure there's some validity for some people, but it was just messing me up. Like I just need to look at the chart. Where do you stand on this topic?
I mean, I think for long, like if you're a size trader and you know you have an agenda over a 6-month period or a year period or 3 months, then you work that macro stuff in. But the way you and I trade, we're like get in, get out, get paid, right?
Yeah.
You know, we're like, you know, like we're robbing stagecoaches. Like, you know, we're just, you know, like just jump off the horse, grab the gold and get the F out of there, right? Yeah. And so we're price action, order flow, structure, whatever, you know, technicals you guys are using on the equity side. That 9 EMA that I stole from you guys is beautiful, by the way, for ES trading. You know, and I really try and block all that stuff out because, like, for me, I get analysis paralysis. The more stuff I look at, the harder it is for me to execute.
Yeah.
Right. And get into that flow state where you're just executing. And if I block everything out and just, you know, I always say it's like, if you're trying to cross the street, just watch the traffic on the street you're trying to cross. You know, don't look at 3 streets over, right? Because you're going to get hit by a truck. Or, you know, it's just that's my view on short-term trading. Right. And I by no means am I downplaying macro analysis and fundamentals and all that stuff, because it's, you know, it's going to, you know, if you have a longer term outlook, you know, then you should play to those things. But, you know, I'd always still look at structure. You know, if a stock can't hold a certain level, no matter how good the fundamentals are, there's something wrong with that stock. Because I look at a chart of a stock like a chart of somebody's heart, like a doctor would, right? You know, some of these stocks, you just see them just continually going lower and lower. And no matter how good the press releases are or the fundamentals of the company, you know, if the company was so great, why are the insiders, you know, why do they hold less than 1% of the stock? You know,
right?
It's like they have no vested interest in the company, right? You know, it'll have like, you know, 180 million shares out, and the insiders will maybe hold 5 million shares, right? If that, you know, it's you know, they have no.
Or why did they all sell? You know, why did they all sell out their vested interest?
Vested interest in the company. They're all paying themselves these massive salaries, right? And it's the shareholders are just getting destroyed. And that's the problem with capital markets, and everybody blames short sellers and all that sort of thing, but it's they never look at the people who actually run the company. You know, like my company makes no money, but I'm taking down 600 grand a year, right? And $10 million in stock options and S8 stock and stuff like that. So you know, if you're an investor, like if you're going to hold a company for a while, you better lift up the covers and see what's underneath there. I'm a big advocate of that. I mean, uh, you know, uh, because otherwise, there's just no point. If you're buying a stock and it's $20 and the insiders have given themselves stock at 30 cents, you know, every day they're selling at a profit.
Mm-hmm.
And so you're holding it at 10, 20, it goes to 15 to 10 to 5, and and then next thing you know, it's penny stock status, while these guys are, driving around in Bentleys. So yeah, it's you just gotta watch. You gotta watch that, and you gotta do research if you're gonna be an investor.
Yeah.
For trading, just follow your chart, follow your price action, and I'm a big believer. It's like Public Enemy says, don't believe the hype.
Yep. Yep. Yeah. No, I've always been of that stance, right? Ignore the news. I try, or the headlines, the global macroeconomic picture. Tried it out for a little bit. Not for me. I've like doubled down on like just block all that out and just keep it simple. And I think too, and I'm sure it's not for everybody who give economic analysis or this whole global picture. I mean, how much of them actually have skin in the game?
Exactly.
Right?
Exactly.
And it's easy to give an analysis as opposed to actually getting it into the arena and like mixing it up, So I think there's also that element to it as well.
Yeah.
I feel like that applies to the AMC guys too. Like, we don't know if any of these people have positions in AMC. It's unclear. We really don't know how much they even trade. They don't really focus on that because it's buy and hold, buy and hold, buy and hold. But are they even doing that? Don't know.
That's interesting. Yeah. Did you ever? None of this ever mattered to you, right? Like back in the day when you were doing your thing.
Oh God, no. I mean, I would read the Wall Street Journal. Just when I first started in the industry, I would read the Wall Street Journal just to learn about the business, right?
Yeah.
But once I was on a trade desk, oh God, we never even had time to read the news.
What about the Fed? And none of that mattered, right?
None of that mattered, because you were working out a position, and then you'd see, there'd be other guys on the other guys in the firm that'd be watching that, and they'd be running around, and oh my God, and you'd be like, did we sell 100,000 shares? Yeah, okay, print it. And it's like, and then your client's like, am I liquid? Yeah, we sold your stock, right? Okay, I want a wire. So we were just liquidating positions for the insiders and for the founders of these companies. So none of that stuff really mattered. I mean, unless it was, something really serious, like in 1997 when long-term capital almost blew up the markets because their quants couldn't trade their way out of a wet paper bag. They shut down the market for the day and they sent everybody home. So we were like, oh my God, do we have a job tomorrow? They're like, well, we'll see, right? That stuff like that was, like those kind of things we would talk. But I would still, and I still read the Wall Street Journal and Bloomberg and just out of, because I like to know what's going on, but does it really factor in my analysis? Like a couple of things, like when we found out that we looked in the Wall Street Journal one day and they said, there's $800 billion borrowed against equity portfolios. Then, then we're like, okay, well then, margin call situations can happen, so we'll have that in the back of our head, but we don't trade it. It's just kind of, what kind of environment are we in,
Right. Makes a ton of sense.
Yeah.
JJ, you were, in the beginning of the podcast, you were talking about how there's not, much long-term money in the markets, right? People maybe are a little hesitant, like some of these larger players, potentially. So, I'm just trying to get into the head of like maybe what some of these guys could be thinking or how they are going to deploy the capital. And I know you read up on these things. You're talking to different people. What sense are you getting out there?
I mean, I don't really know any serious money managers. Remember we had Shauna Sissel on there, and she was a CIO.
Yeah.
It'd be great to get her back on the show, because these are long-term players, and they trade for pension. They invest for pension funds and stuff like that.
Yeah.
And it'd really be a good informative thing to get her back on and see what they're looking for to start deploying capital.
Yeah.
I know like shorter term traders who are large size traders are looking for this crazy market to start holding settlement, right? And some stability, right? The other thing too is these guys, because they have so much money, they don't have to deploy it.
So what he said was looking for the market to start holding settlement. In other words, buying and selling to stick past T+2 settlement. So how we get these rallies and then sell-offs within a 2-day window. That's what he means by that. I think he might even go into a little bit
they
more.
could sit on it and they still get paid, right? Because they still get their management fees, right? And and they're also paid to be kind of stewards of that capital, so and not deploy it irresponsibly. So it'd be really and because I've never worked for a money manager or one of those sort of what we call white shoe, like a BlackRock or Morgan Stanley or these larger sort of investment type houses. It'd be great to get somebody on there and see what they're looking at, with the macro and everything to see when they're going to start deploying capital.
Yeah, it's a great idea. I think we definitely should.
Yeah.
I think here, I've had this thought, JJ, and like, and first off, like before I give this like not even like opinion, but like I'm just a short selling schmuck at home, retail trader. So like I'm nobody, but I think I'm like, if you're giving these, these money managers, you're paying them a management fee, whatever, and they're like, oh no, we're not doing. I'm paying you to tell me you're not doing nothing with my money. I'm like, what the fuck am I paying them for? Like,
yeah, well,
it's just funny.
You're paying them not to lose your money.
That's true. That's true. I guess that's a fair point.
That's the one thing. These, high net worth individuals have different sort of.
Listener, from your position, JJ, how have you been seeing retail traders fare in the market this year?
It's been a lot harder for a lot of these folks. People, a lot of these people, it's like sailors. They've been fair weather sailors, and the market's going up. It's been good, but when those storms come, it's really hard because some days, some days of buying day, the next day is a shorting day, then you're buying again, and being able to switch and not get held up in choppy markets. And there are definitely times in the day where you shouldn't be trading, right, where you're letting the large size traders do their business and not getting in the way. And a lot of people have just been getting chopped up. It's been a very difficult market, and for a lot of retail traders, and we've been really trying to keep people on the right side. And like you'll see that after some really really bad days, the next day on Zoom there'll be less people, and that people have just gotten chewed up. And you tell people to be careful, because I've been doing this for 30 years now. But you tell people to be careful, but unfortunately retail trading is, you're sitting in a room and
okay, this part is really this part is really relevant too.
Careful, but unfortunately retail trading is, you're sitting in a room and a lot of people who come into retail are, they're sort of type A personality people. They're used to taking the bull by the horns and working really hard, and to them to sit and wait for a trade, or wait for the right conditions to come, that just goes against, they're like, I'm just sitting here, I'm not working, I'm not making any money, right? And then they go into a trade, get stopped out, they go long, go short, go long, go short. Next thing you know, they're down $500 to $1,000, and it's just it's really it's been pretty nerve wracking for a lot of people, and I sympathize with that. And even me, like sometimes, I'll when I start trading, I'll just test myself on a micro or two to see if I do a lot of self monitoring. Is my brain working? Am I executing? Before I even think about sizing up.
Yeah.
It's the only way to do it. You've got to really, test and just make sure that, you can't be too overcautious, but I was taught to be really cheap and preserve capital. So That's the big thing with me. You know, I'll test the market out, see how it's trading, and moreover, I'll test myself to see, you know, am I seeing things right? Am I reacting right? If I'm not reacting right, you know, I got to start reassessing, right? Um, you know, what I'm doing, or if I'm seeing something, or I'm reading it wrong. So I do a lot of that, like especially on Monday, if I have
along this topic, right? Like we have, you know, markets tanking, and like this is obviously across crypto, NFTs everywhere.
Oh God,
and
yeah.
I was thinking, you know, especially like when that whole Wall Street bets movement was going on, and it was like,
here we go.
I mean, I remember thinking, I mean, me and you've had private conversations during that time. To me, it almost seemed like it was like promoting like reckless gambling.
Oh yeah, it was.
You know what I'm
Yeah.
saying? And like everyone wanted to be that gunslinger, and
Yeah.
we bring this back to rounders. It's like, yeah, it's not glamorous being Kanish, but like,
Yeah.
those are the guys who have the money at the end of the day, like over the long run,
yeah.
long run, right?
Yeah, I mean, when what's his name got busted out, you know, he had to go to Kanish, you know, and
Yeah.
you know, he had to go work for Kanish or whatever, you know, and yeah, so I think trading, and a lot of things too that you know that I've actually started to say now, and I never used to say it in the old days, was, you know, people want to grow their accounts, and you know, they'll say, okay, I'm going to take $5,000, make it 40, and trade that into 200,000. I'm like, dude, you don't have the skill to do that, right? Start by making a living and being consistent, right? So what we get our guys to do now in the room for people who are new and are just getting consistent is every week take money out of your account, right? So your ego can't get your hands on it, right? And just always pay yourself. You know, and I was thinking over the weekend, because I had a buddy of mine who was having trouble with this, and I said to him, you know, in the old days, before I became a retail trader, I have never wired.
Focus on these good practices. Make X amount of money. I want to make X amount of money over time. You're going to win, and you know.
Yeah.
You don't have to worry. Like people are always like, oh, I want to make X amount of money. I want to make X amount of money. And I think like me and you, what usually our response to people is like, just focus on these good practices. Do the good process, and then the money will take care of itself.
Yeah.
Not vice versa. Not like, oh, I want to make this money and I'm going to do it. Well,
yeah,
you got to.
Yeah, it's good it's good to have goals, but realize that trading is a skill, you know, and it's like say you and I walked into a hospital and said, hey, we want to do a little brain surgery to make a little quick cash here, you know, or let's do it, you know, yeah, I'd like to do a mitral valve, bypass and make 200,000 doing that surgery, right? Did you go to med school? No, but you know, I watched a YouTube video, right? You know, like, yeah, it can't be that hard, right? Yeah. So, you know, when I say that to people, they're like, oh, I'm like, yeah, you know, this is a skill, you know, and people like, you know, even like poker players, like how much time did you put in learning, watching things with all that stuff and the software and all of that stuff, the preparation you did? You know, it's not like, you know, you went to a bar and you drank some beers and started playing poker and making money like they show in movies. You know, it's like it was systematic. You had, you know, you ran through scenarios and you did all of these things, and nobody sees that part. Right. So, you know, it's just like anything else, you know, and unfortunately all the boring stuff is what actually saves your butt, you know, in the end, from blowing up accounts, you know. It's that boring discipline, you know, and all that stuff that's not glamorous, you know.
Yep. That's exactly right. So yeah, so JJ, so I got we got a question, you know, I was fielding some questions from the room today. Only got one, unfortunately. I was hoping we get a little bit more, but I guess they probably hear us enough. But this is coming from my boy Youssef. Big shout out. He's in Hawaii, JJ. He's a Hawaiian. Cool. Yeah, shout out to
how's
him.
It?
Good
how's it?
Good dude. So the question he has here is, so it's kind of a mold. I'll read it all at once, JJ, and then you know, if I got to go back and read some, we'll do that. So he says, what is stepping in front of size? What is an inside bar? How is this applied to lower time frames? Inside selling versus outside selling. How to identify sticky buying. So I guess that's kind of a lot. Well, I guess we'll start with the first one. So what is stepping in front of size?
Stepping in front of size is what large traders will do, and sort of more sophisticated traders will do, when they see a size seller, right? So say a stock's trading at $10, and all of a sudden you see a size seller coming in, right? You see all the bids getting hit. They'll step in front and short ahead of that, like, or front run it, right? That's what stepping in front of a large buyer, right? Because a lot of people who are watching the DOM, that sort of thing, they'll see a large bid show up and they'll jump in front of it to try and front run the order flow, right? Get ahead of that buyer. And so that's what we call stepping in front of size, right? And what was his other question?
Yes.
Inside
So
bar?
yeah, he has an inside bar, and how is it applied to lower time frames?
Okay, well, for me, an inside bar means, it doesn't take the high or low of the previous bar. So what's going on there is a lack of order flow committed in one direction. So that inside bar is when the market's kind of, like, to put it in a funny manner, it's like the market's taking a bit of a smoke break, right? It makes its move, and then you get an inside bar, and it's just kind of chill out for a wait for some more order flow before the next move happens. And that inside bar allows traders to adjust their inventory, that sort of thing.
Makes sense. And I would imagine like this, it's kind of like I want to stay out during this time period, right? Like
Yeah. That's the time where you go get a coffee.
Right.
That kind of thing. Yeah.
Right. Okay. All right. So next part of the question, inside selling versus outside selling.
Oh yeah. Inside selling is just like in the ES, for example, at say 3:00 in the morning. If everything's calm, there's no news or anything. Inside selling is, say, a market's at like 5, and it trades at 5 for maybe an hour, 2 hours. And it can't get to 6, it can't get over 6. Then people are trapped, say, between $4 and $5, and then those people become supply when they start selling out. So the market will adjust inventory by selling off, but it won't break like serious levels. It'll hit a level, that selling will cease. The large traders will buy it all up, and then back up we go. That's inside supply. Those are just trap longs, right? Whereas outside supply is what we call dilution, right? That's when a large seller comes from outside and starts selling size into a market, and you can tell right away, because it won't hold your market profile levels, or it'll break EMAs, or it'll break your fibs, or whatever you're using to watch price action. It'll just chew right through that, and that's what I call outside supply.
Cool. All right. And then the last part, how to identify sticky buying.
Oh, okay. Well, sticky buying is buying that'll hold settlement, right? Especially in a stock. So, we were looking at what was that stock that you guys were fooling around with? Was it EDU and Dawn?
Right? Yeah, EDU and Dawn. Yep.
Yeah. So the EDU finally came apart in the last couple of days, right?
But, yeah, at least somewhat. But it's held decently. I mean, I had some good shorts on it, but it hasn't like really peeled. I mean, it did today. I had another short on it, but
it's not bad. I mean, because it went up, like, say, on the 15th, and the next 2-3 days, it held $21. Yeah. So I would say that was fairly sticky buying for that time. Yeah. Then it traded another couple of days, and then finally inventory got long, and it broke 1955, but it's still trading above 1807, right? So for me, sticky buying is buying that holds settlement, right? Like, look at DAWN. That's sticky buying.
Yeah.
Because after it made its move, it still has not. Yeah, it's stuck, right?
Yeah.
And sticky buying means two things. You got people who are buying the stock that are holding it past that T+2 or T+3, or past settlement. And the other thing is, supply seems to be kind of getting choked off in that. Looks like they acquired all their stock under $8, and they're being very, very diligent, just selling very gingerly. So yeah, that's sticky buying.
Yeah, I think I really love that that concept, because because we're talking, because I short sell.
Oh yeah.
And so, like, obviously, like, that's very important. Like with Dawn, right? It's like, okay, like, this thing is not,
It's
It's not going. It's this is real buying. Like it's not. I should stay far away from this. Like it's
exactly, because you know you could tell. You look at the chart, and I can already tell that the insiders in Dawn, they're like more long-term greedy.
Yeah,
Right?
yeah.
Because the way these guys think is, okay, we could make, I don't know, we could make 50 million in a week, or we could take 6 months and make 400 or 500 million, right? And you know that long-term greed, you can see that on a chart by the way it trades. You know, it's like they sell a little, you know, and the so that's a good thing to that's a good question.
Yeah. I stayed clear away from Dawn since the one day we were talking about it, but I keep taking stabs at EDU short. But that one I've traded so much over the past, JJ. Like when that one unravels, it fucking unravels. I mean, as do a lot of the China stocks. You know what I mean?
Well, yeah. I mean, hey, like
All right. So if you like this, check out the you can check out the rest of this. Also, they have. Well, I guess this is episode 86. They've been going for a couple years, so pretty cool podcast. Just really good trading and investing, but more so on the trading side. So that's why it kind of interests me, I guess. And yeah, I mean, sticky buying. So there's some sticky buying that holds, as opposed to, I don't know, slippery buying. Just buying, shorting, buying, shorting, buying, shorting. So yeah, good concept to know. All right, 4 million FTDs. Okay. Not really. I swear to God, if he adds up the FTDs, I'm going to blow a gasket. So let's see what it actually is. So currently 1.2 million. Well, this is from the 14th. Yeah, so you only get these twice a month, but you can see that, well, starting here at the beginning of June, you can see that, they added 159 and they added 1.7 mil. Then they covered 925,000. Then they covered 600, 640, 415. Then there were 346 added. So these numbers are constantly, this is a constant running total. You can't just add these numbers up, which I've said, I think, until I was blue in the face at least once, at least a dozen times. So let's see what the hell this guy's going to say. But I'm still waiting for one of these guys. I'm still waiting for any of them to explain correctly how the FTD numbers are reported. I haven't heard it. If anybody knows of anybody who has actually explained it properly, the correct way, with the cumulative aspect of it, let me know. I don't even know. I don't know. I haven't seen it. I have not seen it. I don't know why
We have not seen failure to deliver numbers like what we are seeing right now with AMC stock since June of 2021. So why is this such a big deal, and why does this need to be addressed and talked about here on this channel? What could this mean for AMC stock heading into the future? I think there is some clear answers here, and that's what we're going to get into for the most part here in this video. We're going to touch on some other key things as well, so stay tuned and let's make that money. First thing and the only thing I will ever ask you guys to do is free 99, and that is to hit the like button, and I think your family will appreciate that. Give it a couple years down the line. But talked about failure to delivers, and I
Okay.
don't think people talk about this enough in the AMC community.
I think they talk about it too much.
As of right now, specifically over the last couple of weeks, as the failure to delivers are now in the 2 to 4 million share range. So what is a failure to deliver? Well, a failure to deliver FTD refers to a situation where one party in a trading contract, whether it's shares, futures, options, or forward contracts, doesn't deliver on their obligation. Such failures occur when a buyer, quote, the party with a long position, doesn't have enough money to take delivery and pay for the transaction as settlement. A failure can also occur when the seller, the party with a short position, does not own all or any of the underlying asset required at settlement and so cannot make the delivery. The key takeaways: failure to deliver FTDs refers to not being able to meet one's trading obligations. In the case of buyers, it means not having the cash. In the case of contribute to the rallies that we've seen in January and June of 2021, and I think there's a B. Well, that could be obviously naked shorts. That could be some buyer side. It usually happens on that collateral to be able to buy those shares if you get exercised, right? So it usually doesn't happen on the buyer side. It usually happens on the seller side. Now,
how
what
do you
could
know
that be? Well, that could be obviously naked shorts. That could be somebody sold an option and now they have to go out and buy the stock because they never owned it. Maybe it's hard to acquire these shares, or for multiple other reasons. But the long story short with FTDs, it is shares that need to be rebought that are not currently bought. So the best way I like to look at it is what we can prove with these millions of shares is that they are millions of shares that will need to be bought back here in the near term.
No. I mean, 1.2. But you can be sure that, you know, once this data catches up to the last half of June, you'll see these numbers go down, you'll see them go up and go down, and they're constantly, just like short positions, you know, they go down and they go up, and it's cyclical.
Future. Now, stocks bought and sold in transactions must be settled within 2 days. The buyer must deliver the cash and the seller the stock. If either party fails, a failure to deliver takes place.
Right.
Like I just said, that's the 2 days from essentially when you're supposed to deliver them and when the transaction actually settles, T+2 settlement time. But the T+35 rule, it's been a while since we talked about that here on this channel. That is with respect to delivery against payment transactions. The broker-dealer has up to 35 calendar days, T+35, to obtain payment. Quote, if the security is delayed due to mechanics of the transaction and not related to the consumer's willingness to pay. So it's not to say that, hey, there's an insolvent hedge fund and they're just not able to pay, so there's going to be a bunch of FTDs, which I'm sure that can be the case, and it wouldn't surprise me if that is the case, given what has happened in the markets. But typically it's not supposed to be a problem of
that would only happen in the market
but
if the hedge funds were long on AMC, and you all talk about how they're shorting AMC and it's down 48% on the year, so that makes no sense.
And again, that's probably what contributed to January and June's rally. People just didn't want to buy those shares back after the essentially the stock went to the moon, right? People don't want to close out their naked short positions or short positions in general when a stock does fly to the moon. And if we look at the failure to deliver numbers that we have been seeing on a consecutive basis over the last couple of weeks now, you can see on May 16th, we had 1.2 million failure to delivers. The next week after, you had almost 3 million, specifically 2.98 million failure to delivers. And then we did peak out at 4.67 million, went down to 3.81 million, and we're still sitting at 2.41 million
Please add them up.
delivers. And what is happening as far as the price action,
Please
you're
add
not
them.
really, in my opinion, seeing a lot of those FTDs being covered. Yes, AMC does have a slight uptrend. Like,
I mean, you don't have to even look at the price. You can look at the numbers themselves. I mean, Jesus fucking Christ.
We talked about in the last video, which we will look at again here in this video, but I don't actually think these FTDs have been closed out yet. And let me explain myself, because you can see what happened back here in April, May, and then eventually when we rallied in June, the FTDs went from May 3rd at 11.73 million down to 2.2 million by May 17th. But during that time, you hadn't seen a major rally yet. You actually seen the FTDs fall before that major rally ever started. So I think it's just how the information is relayed to us. There's actually a pretty decent delay between when these FTDs actually go on ORTEX, or when they actually get reported, and the point where they actually get bought back, because it was indeed about 35 days from the spike of these failure to delivers in June until you ultimately did see the high in FTDs at 19.7 million June 21st, after AMC stock had already rallied for the most part.
You can't talk about it
so
that
I do
way
think
because it's cumulative,
a little bit
so you don't know which. It's just not how it is.
Backward information, let's just call it that. So I do think you will likely start to see some FTDs possibly being covered in this next upcoming week. And then if you want to boil it down in simplest terms, if 5 million shares at the peak, would have had to have been bought by now.
That's not true, though. You're talking about a cumulative number again.
You haven't seen AMC stock go through any kind of rally during that time period. Not even right now you're seeing AMC rallying. We were actually slightly negative on the day for Friday. And then if you mix in here even what ORTEX is giving us as far as the estimated short interest of free float, which is now 18.8%, down from 22.51% over the past 7 days, I think we're just getting a little bit of bad info, and the way that it gets reported to us.
Of course you're getting bad info when the short interest goes down. What a fucking, oh my God. Yeah, it's bad info when the short interest goes down, but when the short interest goes up, man, oh yeah, let's hype the fucking shit out of it. What a douche. I mean, seriously. What an idiot.
Is obviously not the best. So short interest is not going down in a big way, and FTDs, there are millions of shares.
It's just down 4%, but you don't want to acknowledge that because it's bad for business for you. Fucking grifter.
It's hard to know on a day-to-day basis how many FTDs there are. The peak we knew of about almost 5 million, and where we're currently sitting at right now as far as June 13th, which was still a while ago, guys, failure to delivers were at 2.41 million.
I don't see 2.41 million on here at all anywhere, but whatever.
We have not seen a rally at all, so I do think the short interest is still well over 20%, and I do think.
What are you talking about, bro? Like, what the fuck are you actually talking about right now? What do you think these rallies are? This isn't a rally? It's not enough of a rally for you. Okay. Yeah, because it's not going to the moon. What do you think this is? Just randomly everybody decided to buy that day. God.
FTDs will have to be covered here in the short-term future. So that's the best way to look at it, is it's a guaranteed amount of shares that will have to be covered here in the near-term future. And why this is actually happening is likely due to all of the option activity. It could be due to some naked shorting, but I'm not going to go out and
what
make
option
that
activity? All the out-of-the-money calls that we saw? Right, okay.
Claim without having stronger evidence, but it is a possibility. And why I really wanted to point this out is because we have not been over, 1 million FTDs since June of 2021, since this day right here, March 21st, 2022.
Well,
if we go ahead and look back at the chart for March,
that's not true.
21st, we could see...
There's a million. There's a million.
March 21st was right here.
Keep in mind that's a total.
Right.
Also,
when AMC stock was trading at about $15 per share. Well, what happened after that? Well, you've seen the stock run up to $34. So that would probably, to me, indicate a pretty substantial rally is coming. Even when you look at AMC on a technical basis, we're holding support above the 50-day moving average, something we have not done
July.
Since back here in April.
June.
It was April 11th, the last time we were above the 50-day moving average, and we found resistance.
Even then, last year, you see, 2.3 million added, 1.7 million added, but then 420. You see the numbers go down, and then on July 6th, you see the number decrease by 2.2 million. and then it's super low. So I wish these guys would learn how this what this actually means, how this is actually reported. That would be nice. That would be nice. And obviously, you know, you're going to have more FTDs when you have higher volume. It's just, you know, it just, that's how it is. Like 27 million. And then look, from the 27th to the 28th, plus 27.3 million. On the 28th, minus 27.1 million. So they were literally taken care of in one day. Pretty amazing. What's more amazing is that, you know, this guy is continually hyping this without knowing what he's talking about at all. He's not curious.
Level quite a few times in the past, finally broke.
But he's got diamond hands, baby.
He did struggle along this descending
level.
I
can't listen anymore to this nonsense. I knew that. I mean, fuck, Jesus Christ, insanity. Well, Antoinette, you know, I can't wait for it to end either, even though it would basically, you know, well, it's not going to end anytime soon. Let's be honest. It's not going to end soon. But there's not a lot coming out today. All right, I'm going to look at Thomas James. And then, well, first we'll welcome back. Oh, he stopped saying, welcome back to the channel, everyone. Welcome back to the channel, everyone. Welcome back to the channel, everyone. This weird ass irrelevant futures market today. Okay. Since that is technically the topic of this
a number
video.
of different hedge funds are currently down over 90% for the year and are on the brink of being liquidated. So stay tuned and let's make some money. And I want to dive straight in with the key.
I mean, it is coming, yes, but you know, don't underestimate it. How you know, when people are desperate, I'm just saying, it is coming, but I honestly, I don't even know. I can't even make a guess because I know it's going to be wrong, but I think it's still going to be happening in December, personally.
So, this information comes from some snippets from the Owl Media Research pitch decks. Owl Media Research is the company behind FTX and Sam Bankman-Fried. So this pitch deck mainly talks about how FTX and Sam Bankman-Fried are setting up a new high-frequency trading hedge fund to exploit the crypto market. It talks about
more crypto stuff. Multiple funds down 90% this year. Are we talking about fucking crypto hedge funds? Probably.
How most high-frequency trading firms buy and sell shares in the same stock on the stock exchange. However, FTX plans to buy cryptocurrency on one exchange and sell it on another exchange.
That's called
arbitrage. If they see
arbitrage.
a large buy order coming in on Coinbase, they can use their connections with BlockFi to buy some Bitcoin at a cheaper rate and sell it to this newer, expensive buyer on Coinbase. Now he talks about how so far his fund is up 26% over the last 4 months, which equates to 99% return per annum. But what really stood out to me is this sentence here where he talks about his capital preservative strategy. And he says this strategy is much better versus other funds that are down 90% this year. That means that right now there are a large number of hedge funds that are currently down 90% or more this year that haven't yet gone bankrupt.
Except this whole fucking thing is about crypto, right? Oh my God. Okay.
But are obviously on the cusp of being liquidated. And something very interesting that builds on this is this tweet from PK Lance. He said the Bank of England warns the margin call model may underestimate hedge fund risk. This Bloomberg article says that some funds may need to post more collateral, the UK regulator says. However, ISDA defends its model and says it will engage with the UK's regulators. Clearly, the current ISDA regulations are suggesting these funds are okay and don't yet need to deposit any more collateral. However, UK regulators are saying these funds are basically screwed and need more cash. It says banks may not be demanding enough collateral from hedge funds to satisfy new margin rules that are set to go live in September. The Bank of England's PRA has told banks that a widely used model to calculate margin requirements doesn't appear to accurately reflect the risks some funds face in unlisted securities trades. The warning comes months before hundreds of hedge funds and other firms come under the scope of rules expected to drive up the costs in the $12.4 trillion derivatives market. Basically, these funds are down 90% on the year and are soon going to have to stump up much more collateral or face these coming liquidations. They either stump up this additional collateral or lose the additional 10% of their fund and end up going bankrupt. Now, as I spoke about in my Q&A video a few weeks ago, when these funds go bankrupt, it doesn't mean they lose every single penny the fund is managing. They only lose the money the fund has put into the trades themselves. For example, we know that Citadel trades using an 8-to-1 leverage ratio. When Citadel goes bankrupt, they don't lose every single penny of that $240 billion fund size. By going bankrupt, it means they've only lost the $40 billion.
Why would Citadel go bankrupt? They may, God.
Those trades themselves. The remaining $200 billion has been borrowed from other large banks like JP Morgan, Bank of America, and many others. When Citadel loses that first $40 billion and has lost 100% of their fund size, that's when Citadel is liquidated, forced to sell off its long positions, forced to close out of its shorts, and return any money to those lending banks. Therefore, there's clearly a
That's
number
a complete fucking fantasy, dude.
of funds that right now are down
Jesus
90%
Christ.
this year and are obviously just about to be liquidated. And on that note, Gold Telegraph has tweeted saying breaking news. The major crypto broker, Voyager Digital, has just suspended all trading, deposits, and
more
withdrawals.
crypto stuff.
And the news comes a few days after one of Voyager's customers, aka 3 Arrows Capital, failed to make payments on a loan worth hundreds of millions of dollars, fueling growing concerns of an insolvency contagion effect across the industry. Now, as you may know, the crypto lender BlockFi provisionally agreed a bailout deal with FTX. Voyager Digital also recently agreed a similar deal with FTX as well. FTX just pumped in over $600 million.
So we're still talking about crypto. And Batar. Is that right? Batar? It's not really judging. If fact-checking is judging, if evaluating the veracity of what someone is saying is judging, then I guess I'm guilty as charged. But, you know, dial back your emotions a little bit. Be an adult.
Digital, and
let's realize that some people are right, some people are wrong. And in the stock market, it's a good idea to see if things are true or not.
Voyager Digital are indeed insolvent and end up going bankrupt. That's $600 million that FTX has just lost, like that. This article talks about a massive hole in Voyager Digital's financial statements. It talks about how nearly half of all of their assets are currently loaned out, and most of those lent assets did go to 3 Arrows Capital. Approximately 28% of Voyager's assets.
Okay, so this is, I mean, what does this have to do with AMC? We're looking at Voyager's fucking financial statement. Great. Why don't... Okay.
Alongside that as well. And something very, very interesting is this post from Danny Demonic. He said, I called the FDIC earlier and they said that Voyager Digital LLC was not a bank and therefore it's not FDIC insured. They said for future reference, LLCs cannot be banks.
No shit. I mean, no shit. Because they're not banks. They're tech companies.
Words, it's game over. And he said to get your coins and money for some time now.
Still looking for the AMC connection here.
And now BlockFi.
Oops. Is Mullen or HUSA going to the moon Tuesday? Well, I don't know. Not a fortune teller here, but probably not. Oh, penny stock. And probably not. I don't think really anything's going to be going to the moon. Tanko says it's judging when you speak against nonsense, not judging when they speak against hedge funds. Right. Yeah. Not judging when you know, people like Frankie Muhammad sit there and say that you know, the hedge funds or the 1%ers are stealing from you. Yeah, that's true. I don't. Earnings. I don't see earnings indicated on here. I see it August 17th. And this one says August 16th. We can, I mean, TradingView's earnings are not always right, so we can look at it here. Yeah, it's not showing those. May not even be set yet. You just had earnings on May 16th for HUSA. And on the 16th, yeah, I don't know what you're talking about. Earnings aren't until August.
Time the S&P 500 falls down, Bitcoin is falling down alongside it. Now, I don't necessarily think...
Oh, Google said it was? Well, that's why you got to use multiple sources. I just saw two that said it's in August, so...
I think that Bitcoin is causing the entire S&P 500 to fall, but I do think Bitcoin and the S&P 500 are very heavily correlated. These hedge funds that are currently short...
But, you know, according to that Batar guy, that's judging.
Stocks like AMC when they need additional liquidity to continue propping up their short positions. They have been selling off crypto and they have been dumping their blue chip stocks. Therefore, when they need to pump in additional liquidity,
I kind of just spaced out there.
Implosion. If we look at the chart to struggle, like Free Trade, for example, and now BlockFi, I have been removing links and halting advertisements as well. And something very interesting from Mac 10 is that every new low in Bitcoin has led to a greater NASDAQ implosion.
Well, it's called positive correlation, actually. It's not that amazing of a thing.
If we look at the chart of Bitcoin, especially over the last 6 months, every time Bitcoin drops significantly or substantially, we see the number of new lows in the Nasdaq 100 spiking. This is the same thing with the S&P 500. Every time the S&P 500 falls down, Bitcoin is falling down alongside it. Now, I don't necessarily think that Bitcoin is causing the entire S&P 500 to fall, but I do think Bitcoin and the S&P 500 are very heavily correlated.
Well, no
These
shit.
hedge funds that are currently shorting stocks like AMC, when they need additional liquidity to continue propping up their short positions, they have been...
Why do they need additional liquidity to prop up their short positions? I would like to understand that. Why? What? When they need additional liquidity to prop up their short positions, they sell off crypto, is what he's going to say.
When they need additional liquidity to continue propping up their short positions, they have been selling off crypto and they have been dumping their blue chip stock.
Okay, dumping their blue chip stock. I fail to understand that, because the stock just, the stock is down. So, that makes no sense. None.
Therefore, when they need to pump in additional liquidity, we do see the crypto market and the stock market falling at every single interval. And the fact that both Bitcoin and the stock market fall at the exact same time, basically to the day, just shows this isn't a coincidence and it is being planned and executed.
No, it doesn't show that at all, actually. It shows that you're good at making connections that probably don't exist and not showing any evidence that supports the connection you're making. That's all that this shows. That's all this shows. I mean, where's the evidence for that? No one has ever shown any evidence of that shit. This crypto connection. Oh, yeah, the entire crypto market is tanking because of AMC. Right, it doesn't work like that.
Also leading to a greater...
Especially when a fucking stock that's shorting keeps going down. Because nobody's buying it. Literally the only buying pressure is short covering. So what do you expect to happen when there's short selling and no fucking buying? There's not going to be a short squeeze. No.
Crash in the economy and leading to greater and greater chances of a recession. Sven tweeted about some of the recent comments from those at the Fed. Janet Yellen said on June 9th that a recession is unlikely. Mester said on June 19th that he's not predicting a recession. Jerome Powell on June the 22nd said that a recession is not likely, but Bullard on June 24th said it's too early to have a debate about the recession probability. But the Atlanta Fed just updated their estimate for Q2 GDP growth or Q2 GDP shrinkage. The other day it was only 1%, and now they're expecting shrinkage of 2.1%. In Q1 we only saw shrinkage of 1.6%, so the Atlanta Fed is expecting Q2 was even worse than Q1. Obviously, a heavy drop like 2.1% is guaranteed to show signs of a recession. 6 months of the GDP shrinking is technically determined as an official recession. But as Alf tweeted, he said, I get the feeling FinTwit and potentially the AMC crowd as well is kind of cheering for a recession. And he said, this is your kind reminder that a recession is nothing to be happy about. It generally involves quite some people losing their jobs, their homes, and potentially their lives.
Get him adding to these tweets. Lipstick on a fucking pig.
Well. Yes, we know that a recession and the crushing of the...
Well, and here's what comes down with the reply. Do you think you're just going to read that?
The stock market will cause the AMC squeeze because when these funds are liquidated, they will be forced to cover their shorts and close out of their short positions.
Okay. No, he's not going to read it.
He's kind of cheering for a recession. And he said, this is your kind of people losing their jobs.
It says recessions are a healthy part of the business cycle. Our economists have forgotten that and tried to avoid recessions. In fact, it can be argued that their failure to allow the business cycle to proceed normally since the internet bubble popped in 2000 to 2001 is the problem. But, oh, that's not the same guy. Okay. Sorry, I saw Alf down here. But, I mean, that's a good response.
Their homes and potentially their lives as well. Yes, we know that a recession and the crushing of the losing their jobs, part of the business cycle.
Oh, he's reading
still
it.
Nothing to be happy about, and it's still nothing to cheer about. As it was said in The Big Short, yes, we are right, but just don't dance. And speaking of which, $6 billion of deposits has just vanished from banks in China.
Uh-oh.
Since mid-April, customers' deposits in several village banks in Henan, China have vanished. More than 400,000 depositors were unable to withdraw their deposits of nearly 40 billion RMB. The incident caused depositors to take action to defend their rights and also sparked public concerns. So where did the 40 billion RMB go? Can these 400,000 people still get their money back?
It's crazy that over $6 billion can effectively just be stolen from the Chinese people. But I guess at the same time, this is pretty much exactly what will happen.
I just computed it to be like 5.8, 5.9. God, he can't even be truthful about that.
Over in the US and in the UK during a recession when these big banks end up being bailed out by taxpayer money. And as I've stated in previous videos, I do think that during the current recession, a run on the banks or potentially some banks going insolvent and being liquidated is very, very possible.
Yeah,
I do think banks like Credit Suisse and Bank of America may end up going under like we saw back in 2008 with Bear Stearns and Lehman Brothers.
Well, those are two different types of banks, bro. I mean, come on. What are you talking about? What are you talking about? Okay, whatever. Jesus.
Or if you haven't already, I urge you to open a number of different bank accounts at a number of different financial institutions.
Open a bank account at Moo.
And spread your money around these bank accounts so you're not holding more than the FDIC insured limit in these individual accounts.
Who in the fuck? Yeah, you're talking to your ape audience. You think they have more than the FDIC insured amount? What is it? What is it? 250,000? I mean, I'm pretty sure it is. Yeah, it's 250. Like these fucking apes have that. Come on.
And again, if you are holding money in these crypto exchanges like Coinbase, like Bitfinex, like BlockFi, and many others, I do suggest getting your money off of these exchanges into FDIC insured bank accounts, as it's likely these exchanges aren't covered by that FDIC insurance.
Well, because they're not banks, right?
But guys, be sure to let me know what you think down in the comments below. And as always, guys, be sure to ding that notification bell, because that way you'll...
Yeah, right. Never. Will never happen. Spam comment. I love how generationally rich people suddenly start growing a conscience whenever they sense regular people moving up financially. Who in the fuck is moving up financially? What are you talking about, Brando? Let's go, Brando. We are hurting them one day closer. Even when it seems like we aren't moving, we are inching forward. We are hurting them. I don't think so. Now we're pushing back to September. Ugh, this is going to drag for years. Yeah, it's going to take you years to lose all your money, but don't worry, Brando, you will. Anyone who's not investing now is missing a tremendous opportunity. Oh, this has got to be spam. Yep. Been hearing this before, and I'm still waiting. Are liquidations coming soon, though, really? Or are they just going to continue to be bailed out by reverse repos and other entities that seem to have limitless money? If apes had 250K, AMC would have squeezed. They're broke. Yep. I remember Frankie saying he was going to move his life-changing money into a credit union. Yeah. Brando probably looking for government assistance, probably. Funds also have short and put positions. They're making money hand over fist right now. Yeah, I mean, that's true. And I mean, these guys like to talk about how the funds are losing money, but at the same time, the funds are short. A lot of funds are short, long short, or just short. Or they've, switched to hedging. So you can't generalize like this. It's stupid. Oh, I'm sorry. I don't want to judge anybody. No, it's fucking stupid. Gary Gensler sits in his luxury home this weekend sipping a beer and laughing at the apes. This is the most corrupt market in the world. Well, I'm sitting in my non-luxury apartment this weekend sipping not a beer, And I'm laughing at the apes. I mean, that makes the world corrupt, that people are stupid, and that we're pointing that out, that they're listening to charlatans like this motherfucker. You know, when actually you could learn how to trade. Like, there are a lot of people in our chat that are subscribed to our channel who actually do make money, even in a market like this. And a lot of us actually enjoy trading in this type of market because of the volatility, because of the amount of money that can be made on either side. So I don't know how these two things compute here, but or how they square, I don't know. Hey, so Ken Griffin lied. I'm not saying that, by the way. I'm just reading this comment. How is it that no one is talking about the burning records warehouse? I guess they got away with that also. Oh, the one that you guys, that the amateur arson investigators determined was caused by Ken Griffin, right? Give me a fucking break. Everything is literally to support their narrative, and that's just stupid. Funny how they're down 90% and still haven't been liquidated. Dude, you just was promoting BlockFi, right? Clown. I gotta vote that one. Yeah, he's a clown. He's an English clown. Wow. Collapse confirmed. Yeah, because we know that when the market collapses, AMC goes up, right? Oh, right. Yeah, no, it doesn't work like that, does it? Oops. Let's do a little comparison. Yep, it follows the same damn curve. So when you had this rally here, it mirrored a rally in the S&P 500. Let's put on the NASDAQ just to be fair. Oh, look, it follows the same damn curve. Let's put on the Russell, be sure. Oh, yep, follows the same damn curve. Oh, yep. Here, let's make it even easier to see. This one. Oh no, god damn it. Here. Right here. Forgot. There we go. There we go. Let's make it even easier to see. Let's make it even easier to see here. Let me take these off. You know, you guys hip to the object tree and trading view. It's pretty cool. You can turn things off and on like that. It's pretty sweet. Okay, now get the hell out of there. Let me turn off the damn volume too. There we go. There we go. Year to date. There it is. So blue's AMC. You can go back a year. You go back 5 years. So there's one area here. Now we're looking weekly. I don't really want to look weekly. So the market was actually still going up here during last year's run up on AMC. But then this year for sure, I'm not sure exactly when the correlation in earnest started, but I mean certainly you see it here back in December, and you see on this decline here in November, and you see this peak here. So yeah, I mean it's still pretty much following it, but I mean year to date, I mean you can't dispute that. I don't think you can dispute that. pretty much a correlation. A correlation of 1. I mean, I'd be hard-pressed to find any peaks that don't match, or any nulls that don't match. I think there's actually an indicator that does do a correlation analysis, but we don't need to do that. We can see it. You know, it can be seen. What about more recently? Let's take this volume profile off here too. Now let me go back to a line. So like even, so like here it's a little bit late. It's a little bit after. Put back, extended back on. So like this was Monday here. Let me go back to candles real quick. Okay, yeah. So yeah, so the Monday price action was obviously, you know, certain stocks are going to be hit a little more than others, but I mean, it went the same direction. Went the same direction. Same direction. Same directions. Same directions. Same directions. So yeah, no, I mean, I think that's pretty much a dead argument at this point. I really wish they would stop making it, because it doesn't hold any water. It just doesn't hold any water. Let me get my stuff back on here. What we got here? Sitting on the balcony at the Dell, laughing my ass off at these 40%ers. 40%ers. Nice. Let's look at the look at this damn futures market here. Kenny dropped his wallet at the fire, ID and everything in it. Well, that was not the wrong place to drop the wallet. News. He must have paid the news off though to talk about that, because I haven't heard that on the news. But can't believe anything in the. Oh, why am I looking at this? Yeah, earnings Tuesday, right? Yeah. Yep. Nope. Okay. So. Yeah. Who knows? It'll change before Tuesday, right? It'll probably change 3 times before Tuesday. We got super low volume. Defaulting hedge funds. Oh boy, look at that. He's looking at Frank Nez's bullshit. By the way, has Frank Nez put out a video lately? He's got such a nice voice. Finance, knowledge, freedom. Frank Nez Discord link. Redbox stock, a short squeeze is imminent. Yeah? How'd that one fare out for you? Oh. Oh. Ooh, that's rough, bro. What the fuck? What about all these YouTube grifters who were pushing Redbox, and they were hyping this 200% short interest nonsense? Look at it now. Yeah, this is why you don't listen to these assholes. Let's see what he had to say. Let's see what he has to say. Okay, whatever, Evergreens. I don't care anyway. It's a shit stock.
What's up, guys? Frank Nez here with FrankNez.com. Welcome back to another topic discussion. Guys, today was a pretty tough day for the markets. I published a video sometime on Friday predicting that we would actually be green today, and that was pretty much based on the chart data that I had tracked prior to
well, it's a good thing that past performance dictates future returns, right?
Market after hours data. But guys, it was a complete fucking mess today. And what I found interesting, guys, is I was going through my stock watch list, and every single stock was red, with the exception of Redbox. Now, you guys might be familiar with Redbox, right? You go up to one of these, machines at the stores, and you get a DVD. And I mean, it comes as no surprise as why short sellers would want to short this stock, right? I mean, there's a lot of other innovation that this company is actually going through, but I won't talk about them today. But
yeah, that's why they're being bought out, right?
They finished at 15.27 today, up 15%, but they actually were up over 30% earlier today. And what's crazy, guys, is literally if we look this stock up, we can see that the monthly chart, this thing is up over 430%. Now, what I find interesting about Redbox is we look at the ORTEX data for this specific stock.
Oh, the ORTEX data. Oh, yeah, here we go.
Right. If you guys are following the short interest that I update daily, you might have seen this new ticker symbol appear. So I will be updating this every morning, just like I do all the other ticker symbols.
I wonder if he's still updating it, and I wonder what the short interest is.
228.06% short interest. That's insane.
That's insane.
100.
It's only fucking 4 million shares. God, I swear to God, these guys. Oops. I swear to God, these guys are so ridiculous. Like, they just see one number. Like, if there's
What's
ever
up, guys?
people.
Frank Nez here with FrankNez.com. Welcome back to another topic.
You know, how ridiculous. How ridiculous. Okay. Wow, this looks familiar. I've seen that movie before.
What's up, guys? Frank Nez here with FrankNez.com. Welcome back to another topic discussion. Guys, today was an incredible day for AMC stock. As you can see, we finished the day relatively well, up 13.31%. Guys, I want to see more days like this. This is starting to remind me back of last year. When we were seeing AMC
not at all
tread below 14 up and down until it eventually was able to cross that 14 level range right before it began to move up to $72 per share, guys. That's what this is reminding me of. And I'll go a little bit more into that, but check this out, guys. This volume of 77 million. This is a great start, guys. This is the average volume, 49.2 million. I've mentioned that
it's down.
If we want to see this thing really begin to pick up some momentum, we're going to need AMC's trading volume to go up. And so this is a great start, guys. And this volume is one of the reasons why I think we also see this great run up here. But that's not all. There has been some sort of suppression that's been lifted off. And we're going to go over that right now, guys. So if we check Stonko Tractor,
oh
here
yeah,
we see that
good
they
source.
haven't borrowed a lot of shares, right?
This is one fucking brokerage source, bro. What a joke. This guy is such a joke. I mean, it almost doesn't even seem real that this... How could... My God. Okay.
To short AMC stock. And check this out, guys. Look at this interest rate. 24.4%.
Oh my God. Oh my God. Less than 1 cent per day per share. Oh my God.
This keeps getting higher for them. It's getting more expensive to short AMC
Yeah, it's almost
stock.
up to 1 cent per share per day. Oh my God.
Which, as you guys know, it
Jesus
now becomes
fuck.
an inconvenience to hold on to these short positions, right?
Not really.
So if a short is holding these short positions, if they're breaking even on the cusp of becoming profitable, or they're holding losses, this here is providing them with more incentive to just get out as soon as possible. So this is really good, guys. And we'll see that the cost to borrow has also increased via ORTEX data,
like, he
which I'll
doesn't
go over in
realize
just
that
a minute. But check this out, guys.
That's what that rally
Look
was.
at the number of shares available for today, June 27th. So earlier we saw this at 3,000, 4,000, 15K, 20, and 25.
Yeah, what does this indicate? What does this indicate? You have more shares coming available. What does that indicate?
It has not increased to the levels that we've seen this before.
What?
So this here, guys, seems to be some sort of suppression that has been lifted just a little bit.
What are you talking about? It's short covering, bro. I mean, it's fucking short covering.
And I love to see
How can these guys be this disingenuous? They dance around the topic so fucking much. They can't ever admit that there is short covering happening. It is so fucking disingenuous and stupid. And this guy, oh, there seems to be some suppression has been lifted. Yeah, no fucking shit. It's called short covering, you dildo.
Because again,
motherfucker.
These rates
what an
are
asshole.
going to play a big role
Fuck.
in whether short sellers decide that it's
Short
still
sellers.
worth shorting AMC stock.
What is this? This guy's a fucking cartoon.
So very quickly, guys, let's switch over to ORTEX here.
Oh, good. From one shit source to another.
We see obviously the utilization
Fuck
is still
me.
at 100. The short interest, 22.46%. This is updated every morning on frankness.com. If you didn't know, I'll leave the link in the description below.
It seems like that. Why? Never mind.
So check this out, guys. The cost to borrow, 15.55%.
Oh my God!
This is what it was before. 11.07, about a week ago, 2 weeks ago, a week ago, yeah. So this continues to increase, guys. This is really, really good for retail investors, for AMC shareholders. And again, it goes back to this. It's getting expensive to short AMC stock. And again, that provides incentive to close, right? Shares on loan, 190.44. Whether we get to 200
how in the fuck is he going to spin the latest data? Which is actually even lower than this. But shares on loan decreasing by nearly 20% in a week. Estimated short interest decreasing by almost 17%. I mean, he's going to find a way to dance around the topic and say, oh, well, you know, but it's shares that were borrowed but not shorted.
Not, I mean, that's insane. I mean, how close we are to 200 million shares on loan.
And everything's a fucking subjective statement. Oh, this is insane. This is insane, guys. This is absolutely crazy. It's insane. It's astronomical. Yeah, because you have never looked at a fucking stock before 2021.
This does not necessarily mean
that's
that
why you think it's fucking
all of these
insane.
are being used to short AMC
Jesus
stock.
Christ.
It just means that they are being borrowed for that purpose, right? And we've seen before that they can return a few of these. So this is probably what we've seen here.
Oh, there you go. This is probably what we've seen here. Yeah. That's probably what you've seen because, you know, shorts haven't covered.
We were at 193 last week, and now it's at 190. It means short covering. It could mean that they just lended back.
That's a disingenuous way to explain it. It's completely disingenuous, incorrect, fucking stupid. You are keeping people stupid with this shit.
But Yeah, guys, I just wanted to go over this data really quick with you guys because I think that as this interest rate, as the cost to borrow continues to go up, we're going to see some sort of suppression get lifted from AMC stock. We keep up the volume, guys, we're going to replicate what happened last year.
What the fuck? No, you're not. No, you are not. For a variety of reasons. But mostly because you're not going to keep the volume up. And guess what? You fucking didn't. And you're not going to because people don't have a bunch of fucking money to waste on stupid fucking stocks that are going nowhere. They've already spent as much money as they can. I don't care what these idiots on Reddit say. The numbers don't fucking lie. The volume is anemic. Where did my volume go? The volume is anemic. The average volume, the 10-day average volume is 40 million. Oh, great. You had a couple days where it was 77, 80 million. Great. Last month, a couple months ago, you had 100 million, a couple days. That's great, but it doesn't, like, that's not retail coming in and saying, oh yeah, we're going to buy it today. Why would it happen like that? It doesn't make sense. So he's just garbage.
In June, where we saw AMC was trading around
a lot of them
$14,
already are jobless.
It broke that level, and it began to surge up to $72 per share. So this is looking really good. It's possible that
he thought that this is how retarded this guy is, okay? He thought that Monday was like last June. I mean, he thought that he saw this and was like, "Oh God, I think I can spin that. That was like June 2nd of 2021." You're gonna have to try harder than that. I'm sure he did the same thing back here. What do you want to bet? He did the same thing back here, I'm sure. But it's not. It's not even close. Look at the damn volume. Yeah, that was when you had 170 million, 226 million, 212 million, which is still 1/5 or so. No. Well, let's just say half. Half of the volume. No, 1/3. 1/3 of the volume that was sustained for, weeks? So, we know that, I mean, and that, again, that's not retail coming in. Because it was bought and then it was sold. And this was right at the end of March, right at the end of the damn quarter. So, I mean, it's like they don't look at anything other than something that they can hype, and they just zero in on that. It's so disingenuous. It's so disingenuous.
We do see some sort of a pullback because we did have a very, very strong day today. It was a very bullish day today for AMC. So don't freak out if you see some sort of pullback tomorrow
and then
sometime this week. But
and then you come to the ORTEX data that
last year when
you
AMC
see that there were massive return shares on Monday.
Momentum.
Oh, but that's not short covering. It's just people returning shares that they borrowed. They didn't short. Right.
Phase. We did see a lot of days like this, and so it's going to be awesome to see this happen again for you guys who have been holding all this time. So,
God, what a fucking gaslighter! Oh my God, this is so manipulative. I mean, this is really bad.
Hear what you guys think.
No,
Leave a comment in the comment section of the video below, and let's start a discussion. I'm curious to know your thoughts on today's day. I'm curious to know your thoughts on the increasing borrow fee. Let's talk about it. Leave a comment below, guys, and guys, I just want to say
this is all algos.
A big thank you to everyone who was able to get on the channel right as I had published the Discord link. I did see that some of you guys missed it.
Okay, yeah, well, we missed it. I'm telling you, be careful on those puts. You got high implied volatility right now. Go far out and go in the money. If you can. All right, well, there's nothing else on here. This is all the same shit. So I'm just going to pop over to Thinkorswim here and see that, you know, yeah, that's going down now. We're approaching 1%. Looking at the options for AMC. Yeah, you don't want to know my thoughts either. I mean, obviously, they could very well find out what my thoughts are by listening to the videos where I blast them all, but let's see here, September. Or January. This January 10 doesn't look too bad. So the September is the one that goes to 50, right? God, look at this spread. Spreads are terrible. Everything is. Wow, that's horrible. Even these. 6 cents, 4 cents, 3 cents, 5 cents. I've noticed the spreads have been really bad lately on everything. Why do you think AMC is going to go down? Well, there's no buying pressure, for one thing. So short selling has the effect of pushing the price down. If there's no buying to counteract it, there's no buying. The only buying pressure is short covering. You know, there's a fundamental argument as well. You know, just check out all my videos, my channel. Not to mention the fact that the argument that AMC is going to the moon has been thoroughly debunked, probably half a dozen different ways. So, you know, it's not like every catalyst is fake. Let's see. Yeah, if you haven't hit the like button and you do like it, you could do that. Heading to 970. Curious if the shorts are paying a cost borrow fee on the FTDs. I don't know. I mean, if they haven't, so first of all, you can't necessarily assume that FTDs are shorts. That may not be the case, right? It may be from any number of other reasons. Could be from market maker not having the shares on hand, not getting them, turning them around. Well, I mean, they've already sold them to you. Oops. They've already sold them to you. And technically that is short volume, but it's not the same thing as short selling. So you see FTDs increase when you have high volume, high buying volume, buying pressure. So that's something, you know, that probably worth looking into. But, you know, no, of course, it's just FTDs or naked shorts, or FTDs or shorts. Not necessarily. Why do you see FTD numbers go up when you have more buying pressure? That doesn't make sense, because short selling is selling pressure. So, you know, you got to check your assumption. It doesn't matter though, because, you know, the answer is it doesn't matter, because the borrow fee is negligible. It's 1 cent. If the borrow fee were 50%, which it's not, but if it were, that would be about 1.8 cents per day per share. So less than 2 cents per share per day. But it's not 50%, so it's less than that. So if you're looking for that as a catalyst, you know, good fucking luck. And we see things starting to take a nosedive here. Where's it? 9:30. Okay. It's 9:30 for me. Let's see here. So you're saying that there is no buying pressure, while saying FTD is up is buying pressure. So you're saying that there is no buying pressure, while saying FTDs up is buying pressure. Well, yeah, essentially. I mean, I'm saying generally speaking, there is no buying pressure, right? Let me get back to my other. Oops, no, I was already on it. I just didn't switch it. So, you know, 30 million volume, 25 million volume, 27, 39, like this is nothing. This is a drop in the bucket. That's not going to have any effect on short sellers. It's not going to force them to, you know, cover shorts. Okay. Now here, there was, well, I don't even know if I guess we do have that. So let's go over to the failure to deliver thing and see where they are. But I mean, it's not even that much, but. So it was right here at the beginning of June, I believe, that it kind of went up a little bit, and you had 53, 71, 89. Okay, so those 3 days were above average on volume. You know, twice approaching, you know, kind of running up to twice the volume. So, and then May 31st was 106, but that was a down day, of course, and then there. So let's see what we got here. Okay. So, you know, an FTDs, the settlement period is T+2. So after T+2, if the shares are not delivered, then an FTD is generated. So, you know, 6-1, 6-2, 6-3. So that's 6-1, 6-2, 6-3. So T+2, it was what? It was 6-3 had the most. So here, June 3rd. So T+2, T+3, right back to this area right here. And of course we could look at the up-down volume, but so again, when you see increased volume, you tend to see increased FTDs. But in general, there is no buying pressure. I would stand by that. Because anytime there is any type of buying pressure, what happens? It gets sold off. Even on a smaller scale, gets sold off. you know, as opposed to, well, I mean, it even happened here, really, but you know, this stuck for a little bit here. And you look at these volume numbers, you know, 700 million, 500 million, 660 million, and even over here, it's still 300 million. And down in here, it dropped down to 57 million. And it could be argued that, you know, that's what allowed the price to slip down. But yeah, I mean, let's see what the FTDs were back in March. So we're looking at March 23rd, 28th, end of March. End of March. Well, not really that much. 23rd. About, yeah, I mean, so a little bit here. The next one was May 12th. And you got to be careful with this. It resizes the scale, so it looks like it's a lot higher than it is sometimes because it's rescaling it. But I mean, the other thing to keep in mind too is that this number is telling you, you know, this is a cumulative number. So, like this FTD change that they calculate here, it's telling you they added 1.7 million, but then it's telling you that they covered 925,000. They covered 605. They covered 640. They covered 415. Then 346 were added. So this is a cumulative total reported every day, telling you how many fails are outstanding, not how many new fails there are. And that's one thing that these YouTubers, like, again, I've never heard anybody explain it correctly. They want to add these numbers up, and you can't add these numbers up. That's not how it works. It's reported cumulatively. It says it right here. It's a cumulative number of all fails outstanding until that day, plus new fails that occur that day, less fails that settle that day. Meaning, you know, however many there were before, plus new ones, minus ones that have been cleared. So Chart Exchange calculates the difference here, and that is the number that's added or subtracted each day. But you can see that, you know, they don't wait 35 days to take care of them. They don't do that. That's the you know, that's the deadline. But you know, it doesn't really, they don't do it that way. So let's see here. I own AMC, and if it hits 2030, I'm out, and I made a killing. I know the stock will never run much more than that because of selling pressure from people like me. That will occur. Yeah, and that's the concept of overhead supply that I've talked about. All these people that bought in here, you know, they want to get out. Every time there's a rally, it sells off. Every time there's a rally, it sells off. So there's a lot of supply up here. There's a lot of inventory that's being held that was purchased at high prices. And as time wears on, you know, what do you do with inventory that you've paid too much for? You have to mark it down, and that's what's happening. So that's another reason why it won't run up, actually, because every time it gets, you know, any type of pressure, which, by the way, is mostly short covering, which is kind of the opposite of a short squeeze if you think about it. Like, they're covering for a profit, not because they're being squeezed. They are choosing to take profit. That's not a short squeeze. That is not the conditions for a short squeeze. But Frank Nez doesn't know or care, you know. He'll just hype the FTD numbers. Lord Nemesis is here. Hello. Finally, the truth from an AMC investor, Brad. That's good. Yep. Let's see. So, yeah, I mean, a lot of people, you know, if AMC hits $20, $30, you know, it hasn't seen 20. It hasn't seen 20 since April, early April, even. Right here. Oops, wrong one. Oh shoot. Uh-oh. Messing it all up. Right here. Wait here. Right here. That's what I wanted. Okay. Right there. Right here. Well, I could get it on 20 though. You know, and I would just be careful about these assumptions. You know, I don't know. Nobody knows. But you know, it just not saying you're making the assumptions, but a lot of people do make these assumptions, and it's just, you know, you can't do that. So, and that's the thing that was lost, you know, in this whole meme stock thing. Really, in my mind, is the whole concept of objectivity, the whole concept of evidence-based thinking, the whole concept of, you know, differential diagnosis or scientific method, you know, looking at every reason why what you think might happen won't happen or may not happen, right? Like if you go to the doctor and you say it hurt, you know, I get this cough. Well, and I think I have a cold, or I think I have the flu. Well, yeah, you might have the flu, but the medical professionals are going to go through a process of determining if that is in fact what you have. And so they're going to look at other reasons why you might have the symptoms that you have. And they're not going to assume that you know what you're talking about. Just like it really, you know, retail investors should not assume that anybody on here knows what they're talking about. They should question everything. And yeah, we know that you think it's going to 37, Antoinette. I mean, I'd like to know your reasoning for that. I think 37 is absolutely delusional. I'm sorry. You know, I'm going to be honest with you. I doubt that. Really doubt that. I hope, you know, for your sake, I hope you're right, but I don't see it. I don't see it. But you know, this concept was lost. It was lost. And it's something that retail investors always struggle with, I think. But you know, it doesn't mean that you can't be bullish on something. It doesn't mean that you don't believe in it if you are questioning it. It doesn't mean that you don't, you know, think it will do that. You know, if it will, I'm sorry. It doesn't mean that you don't think that it's possible if you question it or you try to find any possible reason why that won't happen. That's how that's how you really get to more knowledge. That's how you create, you know, essentially something of value, is you are taking this thing through the ringers and looking at it from every possible angle. And maybe you will find something, maybe you won't. And you have to be kind of, you know, agnostic to the outcome. Yeah, I want it to do this, but it might not. And if the evidence shows that it probably won't, then I'm going to be okay with that. I'm not going to let my emotions take over and get myself overinvested in something that, you know, I know better. You know, it's just, you have to think scientifically. At the end of the day, I think, you know, that is a much better way to play it. Just like if you're going to go to Vegas and play blackjack, if you know blackjack's basic strategy, you know, it's very mechanical. There are rules. If you get this hand, you do this. If you get this, you do this. You hit. If you do this, you stand. If you get this, you always double down. And it's a basic strategy. And if you follow that, you'll actually, you can make money. That's a mechanical system. It's scientific. If this always do that. So it's really fascinating to me. But we'll see what happens. But, like I said, it's at this point, the stock is back down to where it was last May before it ran up. So everything that's happened between then and now, I'm not going to say it doesn't matter because, yeah, obviously a lot of people bought in at these high levels and they're holding on to that supply. And, as time goes on, they're increasingly going to mark it down. And they're going to be okay with lower prices because they just want to get rid of this thing that they can't seem to they can't seem to sell at a profit. It's last year's model. It's last year's model. So what are you going to do? Mark it down, get rid of it, liquidate it, close it out, close out prices. And that's okay. Move on to the next thing. That's the whole point. You can't, you really don't, it's not really a great idea to beat on a dead horse. And I mean, this chart is, I mean, it's not a great looking chart. Like the apes think it's going to do this. Well, what's the basis of that? Well, TREY says it could. Well, okay, but TREY hasn't been seen for the last 6 days. It's just not realistic. So, could you be right? Yes. About anything. I'm not even talking specifically about this, but it's a game of probability. What's likely to happen? Well, unfortunately, it looks like we have, we kind of know, but that doesn't mean that it couldn't happen, of course, but the risk reward, is it worth it? Contrary to what the apes and the ape influencers say, it costs you nothing to hold. That's false. It absolutely does cost you. That's nonsense. That is such a naive argument. If nothing else, it costs you the opportunity cost where you could have been making money and learning how to make money and enhancing your skill and losing money. I'm not going to say you'd only be making money, but you'd be losing money, but you would be learning from those mistakes because you wouldn't be tied to this same narrative that's telling you, no, we're right. We already won. We're just waiting to get paid. No, that's nonsense. What does your account show? That's where you are. Whether you've realized it or not, that's where you are. It's costing you more than what you're losing. More than what you're losing. But, as time goes on, people will become okay with lower prices because they'll have to. They'll have to. Because it'll be clear that, and these guys will still be saying $1,000 per share and at $100,000 per share. AMC can still reach $1,000 per share. Okay? All right. Well, why? Why? How? Let's see.
What is good, Ape Nation? It's Stock J back with another video, and in this one I'm going to be talking about the one and only AMC stock, and it kind of clarifies something that I mentioned yesterday when it comes to the potential price target of AMC and the Moass. I want to clear up something because I don't think that AMC is guaranteed to stop at 250.
Oh,
this
okay.
thing is still squeezed to 1,000.
He must have gotten some backlash for saying 250, which, in and of itself is a completely delusional number.
2,000, 10,000, or much higher than that.
Oh, fuck
I want
off.
to clarify why on earth this 250 number came, why that's a possibility, and why you should actually be prepared for
Fibonacci extensions. Okay, great.
Anything, because things could go absolutely insane with this stock very quick.
Well, by that token, they could go insane the other way, couldn't they, Jay? It could go down. And look, he's on log scale. Because that's what the pros use.
Especially as we're seeing the market taking a hit. Now, before I clarify anything and get into any detail,
I'm going to guess it's because it's this 3.618 level here. off of the run up here, which, I mean, okay, great. You know, a Fibonacci extension. All right.
I do have to mention a couple of things real quick.
Wouldn't that depend on people actually trading the fucking stock? Like,
firstly,
I don't
I'm
know.
not a financial planner. Don't take any of this as financial advice. And also, if you guys can, please smash the like button if you want to see more videos like this.
I can't do that. I'm physically unable to. Sorry.
It only benefits me, it benefits the entire ape community as a whole.
Yeah,
and
right.
The last things, if you guys can,
God.
please check out the movie. They give you 5 free AMC shows. So looking at AMC.
Oh, look. Now we're here.
Just sign up, deposit $100 to get those 10 free stocks. It's free money. What are you waiting for? With that out of the way, let's get on with the video. So looking at AMC, there were a lot of things I mentioned in my video from yesterday.
Now we're looking at Bollinger Bands.
There are different ways you could look at AMC, okay? From a more technical standpoint, right? The Bollingers are really, really tight right now. And they're at the tightest they've been since back in, I would say, May of 2021. Right. We've never seen them this tight. And when you have squeezes, when squeezes occur, or like a massive parabolic move to the upside, typically what happens is stocks kind of, the Bollingers get very tight. The volatility isn't as crazy. They just it's kind of like a rocket launch, right? The rocket's just calm and cool. Then all of a sudden, boom, they just expand out of nowhere. And that's very similar to the setup right here. I also talked about the fractal. AMC was respecting the pattern that looks similar. And then you also want to look at the data, right?
The fucking fractal. Fuck your fractal.
Super high.
Oh, cost to borrow. Super high. At what? About 1 cent per day.
Keeps going up. I mention this every day, so I want to now.
Oh, look at all those shares available too! Wow,
the price, and that's what a lot of people.
The price, yeah, the price isn't the price, is it? Tell us that, please tell us that. The price
isn't the price. People are kind of confused about. Where do I think this thing will go to? And this is my answer. Now, when it comes to the price of AMC, there is something I wanted to actually clarify. Now, I want to remind you all, okay?
Wow,
in my previous.
This guy does not know how to answer a question. Just fucking answer the question. You already mentioned that.
You didn't really catch what I found. And that is, I think it's very probable that AMC might see a very parabolic move to the upside but between now and the end of August.
What? Why?
During that time frame. Now, I'm one of those people that never likes to give dates. I don't like to promise.
Oh, bullshit. Yeah, you do. You always say, oh, it's going to be $1,000 by the end of next week.
I'm just saying it's very probable something like that happens, and you should be prepared for it.
Oh,
now,
yeah.
When it comes to
the apes are always
having that
prepared
big
for that.
run up, you'll notice AMC has these big spikes, then it drops, and it's often been doing this. But the question is, where is it going to go during the next run up? And we don't know if
during the next run up. Well, it's going to go down.
Moass or not. And that's what I wanted to...
Because that's where it's gone on every other fucking run-up.
Clarify in this
why would that be different?
Video. So, what on earth would be the Moass? How would we know if this thing is in Moass mode? And the Moass, a massive squeeze for AMC, not just one of these mini squeezes that takes AMC to like $72 or just a few hundred. I'm talking about the actual giant Moass, because AMC, like I said, has the potential to squeeze to the thousands, but we don't know if we're ready or if it's going to happen during the next run up or not. So what I wanted to do is go over the possibilities.
If
with you guys.
I mean, come on, man. Like, what's the current short interest? Let's see here. They say 93 million. Okay, so it's under a fucking 100 million. All right. If all 93 million of these shorts close their position on Tuesday, you would not have a Moass. Yeah, the price would go up, but it wouldn't go to the thousands. From 93 million? No, it wouldn't. It would not. And the reality is they would never all close at the same time. So if all of them closing at the same time wouldn't cause a Moass, and they're not ever going to all close at the same time, why do I know that? Because because the price is slipping sideways and down. There's no pressure. What are you really going to conclude from that? And the short interest is down. So yeah, this is one big fucking dumpster fire, and nobody, these guys aren't going to admit it because they like their fucking. Why does it say 0 comments too? By the way. I really like your channel compared to all the other crap out there. Yeah, this guy left a comment on mine and said he didn't like me. Of course.
And just to make this very clear, so one of the things or instruments that a lot of people use is the geometric mean sequence.
Yes.
And this kind of just...
Yes, Lord X Nemesis. I've been actually meaning to do that. It just takes time to go through it. But yeah, that is on my list of things to do going forward. So I think, and I also actually want to clip out, segments too and post them separately. It just, all this stuff takes time. But yeah, that's a good thought. Thank you for reminding me of that. Although you didn't know I was thinking of it, but in any case, yes, I can. Yes, I will.
Represents how not every share needs to hit an astronomical level for some people to sell at those prices, right? For us to reach that 100K price target, it's going to be extremely difficult. It is possible, but
dude, you can't even hit $20 fucking. Like, what the fuck, man? It's just a total fantasy.
It's going to cost them trillions. It could even have a negative effect on so many sectors. So
the whole AMC Moass theory depends on naked shorts existing, and there's zero evidence for naked shorts existing. Period. I mean, there's no evidence. Synthetic shares, again, no evidence. Nobody can even say what a synthetic share is. And the apes think that the float equals, that there's, that it's a one-to-one correlation between the float and positions based on the float, and that's not true. It's just a fundamental lack of knowledge. Yeah, if there's 50 million 500 million shares, there could be 500 million long positions. That's true. But if, let's say, 1/5 of that is sold short, so that's 100 million. So now you have another 100 million apparent long positions, but they're not synthetic shares. They're the same shares. There are two long positions that have economic exposure to that share, as well as a short position, which the short position and the long position cancel each other out at the end of the day. And it's like, they don't even exist. So it's not anything. Like, it's just a lack of understanding, really. I don't know. Okay, let's see here. Well, I mean, the thing is, retail investors there is no way to naked short. You cannot do it. And really, it's the same for hedge funds. The same for hedge funds. I mean, there's no mechanism by which to do it because the broker executes the borrow. So when you click at sell short, your broker borrows the shares and then sells them, sends them to be sold. So, it's like, it's not even a thing. I mean, it's just ridiculous that this has so much traction. It's a total distraction. It's a total distraction. I'll say it, they would rather have all these idiots arguing about naked shorting and FTDs than actually learning how to trade. And that's the truth. They would rather you sit here and argue about this bullshit than actually learn how to trade and make money. But at the end of the day, you can learn how to trade and make money, and it doesn't matter. The market will go on. Everybody will go on. People will get flushed out. Some people will, some people won't. It's just, it's so frustrating because this is such clear distraction. And, I'm about to pull up this video because I don't like this guy. This guy sucks. I mean, but let's be honest, most of them do. But this one says, this one says, from this guy, whoever this guy is.
What's
AMC,
up, Mike?
AMC No Limit Soldier. So we got all these late stage grifters coming in here. Hedge funds are creating new YouTubers to get back their money. Okay. So, all right. So Lord Nemesis hates that Chris Norland guy. That's disappointing.
Meme stock warriors. I just want to make a quick video.
Well, I like Chris Norland. I think he's very informative.
Things are happening.
Yes, because you know it.
Chris Norland. I spoke about him a long time ago. And this kid, Chris Norland, what he does is he puts AMC in his titles. And then when you click on it, watch his video, all he does is talk shit on AMC. But he
oh, are you butthurt, little hockey fan? Well, big hockey fan.
AMC to the moon.
The fuck?
AMC Moass in his titles for the clickbait to get his message across.
Look at this fat slob.
I truly believe Chris Norland was sent by a hedge fund. He worked.
Yeah, you probably believe Jesus is fucking coming back to the earth someday too, don't you? Your fucking beliefs. Chris Norland was talking about this shit last year. He was talking about this shit last fucking year. So, I mean, he didn't just show up like you. Like, literally like you, motherfucker. Jesus fucking Christ.
Works for a hedge fund or is getting paid by...
Oh, somebody send this motherfucking slob my channel. Let's get him to talk about me and to call me, say that I'm getting paid by a hedge fund. I mean, what a ridiculous thing.
A hedge fund.
Because anybody who doesn't fucking believe in your stupid fantasy must be getting paid to say that, right?
And a marketing team or whatever to produce these videos.
Jesus fuck.
He's gaining steam.
Good.
Moving forward, there is going to be a lot more people like this Chris Norland. All right? They have caught on. They have infiltrated our space. They have infiltrated Twitter.
No. You know what? You have had a one-sided fucking environment for way too fucking long. And it shows because you are brain dead. You are literally fucking brain dead. You are fried. You cannot accept that there are people who don't believe in your stupid fantasy. Okay? That's what's going on here. Infiltrated your space. Oh my God. No. It has been one-sided for far too fucking long. Far too fucking long. What a joke.
They have infiltrated Reddit. They have infiltrated StockTwits. They have
StockTwits? Why would you even fucking bother with StockTwits?
Every single social media platform. What I truly believe, now they are so far deep. They are plotting, planning, and I guarantee you they're going to start sending
were you present at the fucking January 6th riot? Let's get what this guy looks like and sounds like. He looks like he was part of the fucking January 6th insurrection with all this goddamn conspiracy talk. I mean, seriously, I believe that, yeah, that's because the stock is down so much. I'm just another idiot who doesn't understand short selling. Like, what the fuck? How can you sit here and say this? How can you sit here and say that the hedge funds are hurting so bad that they are sending people like Chris Norland to talk bad about the stock, when in reality, he's giving you facts about the stock. And in reality, the stock is down. And because you've been so fucking busy drooling all over yourself, reading AMC stock subreddit, you haven't bothered to learn that short sellers make a profit when the stock goes down. Like, what the fuck am I missing here? How can this be so stupid? How can this be so fucking stupid? I don't.
YouTubers.
I can't.
a whole different group of YouTubers to pump stock, to get back their money. So just be mindful. You can't take anybody's word for it. You have to do your own DD.
Oh, shut the fuck up. What do you mean? Go to fucking Reddit and read the same bullshit that everybody's been reading for over a year. That it makes no sense. That has had holes poked in it. Every aspect of it. Yeah, do your own due diligence. What a fucking joke.
That's it. What they're saying, think about it, and then do your own homework.
Yeah, think about it, do your own homework, and come to the same conclusion as me, because I'm right.
Trey,
right.
Matt, those fucking guys suck. All right? Stay away from them guys. They have.
Well, you don't even have to worry about it now, because Trey hasn't posted a video in 6 days. Nobody cares about Matt Kors. He's literally trying gimmicks where he is, you know, challenging Martin Shkreli to a trade-off. Like, okay, yeah, that's going to end well. Let me tell you.
Bought and sold out. They're probably sucking dick on the metaverse and in real life. So that being
what? Don't project there, bro.
Said, stay away from them two guys.
Yeah, see, yeah, he's a GOP fucking brain dead piece of shit.
That's all I can tell you.
Guarantee you. He's tired. Oh, they're probably sucking dick on the metaverse. Yeah, did you hear that on January 6th? Fucking idiot. Who sent that? Don't ever send anything by that person again. Lynn! Oh, my God. So, Pantheon. Oh, man. Oh, fuck, Pantheon. The dark pool.
Hi, everyone. Welcome back to the Pantheon. What you're about to hear is an excerpt from Pantheon Radio. And if you like this clip, this is the kind of content you can expect if you tune into Pantheon Radio. Thanks, everyone. Let's get into the video.
Okay, we've got a lot of conversations right now in the community about lawsuits. Well, there's all this talk. Quite frankly, it's all FUD, guys. Okay, we've got certain YouTubers who are talking about lawsuits with AMC. But having said that, I'm going to do a deep dive tonight with litigation overview. I'm going to show you guys with receipts exactly how the SEC, how FINRA, how retail all ties into the courts, the difference between the state lawsuits versus federal.
So he's
and I'm going to show you guys at the end of it what the possible outcome would be, which is why we do not want a lawsuit regarding this play with AMC.
Yeah, they said this last year. It's nothing new here. They said all this shit fucking last year. When, what's his name? Wes Christian was involved. Look at all this shit. Who wants to listen to all this fucking shit? And come to the conclusion that he just said, we don't want a lawsuit. Well, then why would I listen to all this fucking... I'm not... Fuck that. Seriously. What a waste of time. Yeah, I know that you don't want a lawsuit. I do that last year. Because this was all gone over last year before you were even on the scene. Actually, I don't know if that's true, but I'm guessing. I don't know when this clown showed up. Yeah, the last thing, that's what I want to do. Listen to a fucking guy who's not a lawyer, by the way, talk about legal language, who doesn't really know what he's talking about. Yeah, joined November 22, 2021. Yep. Shit, that was right around when my first channel got deleted. So you're basically a newbie too. I mean, yeah, you came in here, started talking bullish about AMC in November. Pfft, bro, that. You know, yeah, okay. No fucking use or time for that shit. Seriously. I mean, you know, that anybody could do that. Anybody could fucking do that. It takes nothing special whatsoever to do this. What this asshole is doing. What any of these assholes are doing, really. Look, you don't have to research anything. You don't have to be right, ever. How do we know that? Well, just look at any of their channels. You know, look at any of their channels talking about margin calls. That one thing. Or, what you know, share count, for share recall. Any of the bullshit catalysts that never come true. And see how many times they've been right. So you don't have to be right. You don't have to do any research. You don't have to do shit. You just come out with super bullish videos and say you're not a financial advisor, and you'll get thousands of views, and you'll be popular on YouTube. Like Matt Stoner, you know, at least he's been doing this grift since January, or I don't know, March of 2021. He found his calling. He has better luck doing this than actual acting, which is his background. But, you know, and if you're Al from Boston, just literally make shit up. Let's see what he made up here.
Everybody, it's Al from Boston. Let's kick it off. This is the broker checklist. I'm making this video so everybody that is an AMC or a GME sees this and does their double checking. The squeeze is very soon. We all know it's going to happen.
The squeeze is very soon. We all know it's going to happen. There's some made up shit.
Very soon and unexpectedly, and you have to make sure that your stuff is wired down tight. Okay. Let me just preface this by saying one thing first. You are not Gordon Gekko, all right? You can lose your life savings, your home, etc. if you are careless in this squeeze, and I mean that, right? Okay. That is 100% fact.
Wow,
right?
You weren't kidding, Lynn. He's telling the apes they're not Gordon Gekko. I didn't believe you, but
let's talk real quick. Trading versus investing, right? Generally, when people talk about investors, they're referring to those practices of purchasing assets like equities to be held for a long period of time. Investors hold their assets long-term so they reach a retirement goal for their money and can grow more quickly. It would be in like a standard savings account. In contrast, trading involves buying and selling short assets in a short period of time with the goal of making quick profits. Trading is typically seen as riskier than investing because you're trading on volatility, of course. And those who are new or inexperienced in trading should do so very cautiously.
So is AMC an investment or a trade? Like, that's kind of a, paradoxical question here. Should have been a trade, turned into an investment. Well, we'll see what he says.
All
Interesting
right.
question.
That is the first thing that I want to tell you guys. That's the difference. Trading versus investing. We are doing a trade. We are not investing.
You're doing
for the
a
future.
trade.
This is a trade. And specifically in trading, what we are engaging in is a short squeeze. And in particularly...
yeah. So a short period of time, year is, I don't know. That's a long time for a trade. A short squeeze. Neither. It's a loss. I like that. Funny.
What's called an infinity squeeze. Okay.
Oh my God.
That is where
fuck off with your infinity fucking language.
Are infinite. The losses are, well, until I hit zero, it's also infinite in some sense. But that's what
that's literally not that's literally the opposite of infinite. So whatever, dude.
Okay.
Wow.
If you're a beginner in this sort of thing, you know what? If you're a beginner and you're just into new to this thing, I'll make a separate video series just so you understand. So I'll skip this and what you guys need to know for the squeeze, the checklist. Okay. This is the checklist that you need to have, whether you're AMC or GME. Okay. Does your margin account, so it's mostly dealing with margin, right? Does your brokerage account that you sign up for give you margin as soon as you sign up? Okay. TD Ameritrade does this. That's one of the things that they're notorious for. They don't tell you, and they kind of rip people off. TD Ameritrade is not owned anymore by TD Bank from Toronto.
How is that no, that's the standard account that most brokerages give you, including fucking Robinhood, is a margin account. You have to have $2,000 in it to use margin. So yeah, I'm so glad it's a simple checklist too. Absolutely. A checklist doesn't use bullet points, but whatever. Cut him some slack, okay? He's a law student. He's in law school. He's a JD candidate for securities law, financial law, whatever. He's obviously short on time, so cut him a break, guys.
It's Toronto Dominion
You have
Bank,
to be assholes.
the one that you know of from your hometown. It's actually owned by Charles Schwab. Okay, so when you sign up, you automatically, to some degree, get some margin, right? Especially if you want to do options. you are going to have a certain amount of dollar range in order to do options. But in terms of margin, you automatically get it. So you can buy on margin. But if that margin, if the value of the stock goes down that you purchased, they can take it away from you.
Here's a guy who does not have a TD Ameritrade account right here. Like, he's talking out of his ass.
Do you have any, and I do mean any stocks that were bought on margin that you keep in the same portfolio as your AMC and GME? I'm talking non-meme stock related stocks. You really need to determine what's a meme stock and what's not. If you see, like, in other words, you
don't let Trey hear you using that term. It's disrespectful to the people that work at AMC.
A non-meme stock like Microsoft or Walmart or NVIDIA or something that's non-meme stock, something that's long-term, okay? Why do I bring that up? Well, it's very simple, you guys. If you hold AMC or GME, right, and your non-meme stock related stock, let's say Microsoft, you purchase that on margin, okay? It goes up to a certain dollar amount. But then the squeeze starts, and let's say the squeeze is started by a market crash, and the value of Microsoft that you own, the value of the stock goes down, plummets, right? TD Ameritrade, on their behalf, because they own half of the shares, they lent you the money. What they can do is sell your meme stocks to cover the margin requirement for your Microsoft stock.
Wouldn't you have a margin call first? Wouldn't they ask you for the money first? Wouldn't you be, I don't know.
Did you know that? It's true. Any stock that you own that is in the portfolio with AMC and GME has to be isolated. It has to be away from that account. Why? Because anytime those stocks happen to devalue in price and you bought them on margin, they can just elect to sell both AMC and GME off completely and to cover the margin requirements.
Yeah, they would sell AMC and GME to cover the margin requirements. That's going to be a low margin requirement then, because these stocks are, not worth that much. But all right, whatever.
You lose your squeeze just like that. That is the truth. You can go call and ask.
Why would
they will not tell you?
Because he's assuming that if the price goes up exponentially, that they're not going to sell, they're going to hold because they're waiting for $1 million a share. Oh, okay, I get it. Now it makes sense as to why you would say that. Wow, what a snake! What a fucking snake!
Tell you they're going to do it. They just do it. Okay. Do you currently have a margin account or a cash account? Call them and find out. Take a photograph of it. Make a video on your phone saying, I am currently on from a margin account to a cash account. I'm not changing it for any reason because I have AMC and GME, and record it and videotape it. That way, if it comes down to it, they screw you over, they can, that we can at least try to get you some money out of it later on. That's a cover your ass move right there, guys. Okay. Do that. Have you turned off margin? Have you cleared out any margin? Converted your one of the input? Have you doubled off? All right, I'm going to get to that for a brokerage account a little bit of time. So don't make sure that this is all done before the squeeze. Alpha and Boss signing out.
Good talk.
Next video coming out.
Good talk.
Everybody, it's Alpha and Boston. This is the second video, the brokerage checklist. Let's kick it off. This is what you need for the short squeeze, the brokerage stuff that you should know if you're going to switch out of your brokers and go from there. All right. I know I made a video earlier about TD Ameritrade, or I made a discussion about that. Let's talk about what a good brokerage looks like for a short squeeze. Not day trading, not investing, but for a short squeeze. First thing is a good reputation from a professional trader. Somebody that worked on Wall Street or somebody that has left Wall Street,
like you,
uses an app for home trading for their own businesses. In other words, they're day traders, but they're pros, they're ex-pros that are now working from home.
So
that's the first one. No PFOF data or personal data shared with anybody. In other words, these people do not.
So you have two choices then. That narrows you down to two fucking choices. All right.
Not only do they.
Why don't you just say the two that don't have payment for order flow?
PFOF.
Yeah, 3 if you believe that Moo is not payment for order flow, but give me a fucking break.
Don't share your personal data with anybody.
Apex Clearing, absolutely. Futu most certainly is.
Let's say you start looking through other short squeeze candidates or other shares. and you type it into the, whatever platform that you're in, those search recommendations or those search histories are then forwarded to Citadel and so on and so forth. And they consolidate all those hundreds of thousands of orders and see what people are looking at, see what they're interested in.
What is he talking about here? I just kind of like didn't catch that. That sounds like some bullshit, though.
They don't share your personal data with anybody. Let's say you start looking through other short squeeze candidates or other shares, and you type it into the, whatever platform that you're in. Those search recommendations or those search histories are then forwarded to Citadel and so on and so forth. And they consolidate.
When you search for a ticker in your platform, those search histories are forwarded to Citadel. Yeah, we need a source for that. Gonna need a source for that. But notice this guy has no sources for shit. He has no sources about anything. None. None. The fact that he doesn't think that he needs to provide a source for that tells me, no, he's not a Harvard graduate. No, he does not have an MBA. No, he is not a fucking law student. Give me a goddamn break. I mean, this guy is a textbook fucking narcissist. Textbook narcissist. He'll say whatever he has to convince you of something. You can hear he's a bullshitter. Oh my God. The search history is forwarded to Citadel. Oh, that's the best one I've heard all day.
Hundreds of thousands of orders and see what people are looking at. See what they're interested in. What the good word is on the street. What are people going to be looking for?
Fuck
to squeeze
off.
Or to buy into because they see a rise coming. And the brokers, in conjunction with the market maker and anybody else that's involved, see that data. They use it for their own advantage. They could squeeze it. They could let it run. They could do a variety of things. But in the end, it's all about taking your money. Do they lend out your shares? I'm sorry.
This guy needs to get his ass fucking suit off. Seriously. This is the definition of fucking FUD. Absolutely the definition of FUD.
Let me just go back to the data sharing thing.
Wow.
The more stuff you put on the internet in terms of the broker, they know more about you. They build profiles based on you. How old you are, how much money you have, the retirement account that you have, where it's tied into. The whole point of this thing is to take that money out of your 401k, your brokerage account, and to put it into their market, which they own and they run, and they are going to take it out of. That's what they're going to do. It's all a big sham. They're all involved in it.
It's all a big sham. So that's why you're becoming a finance lawyer. I mean, come on.
But the point is to get your 401k money, to get your savings account money directly into their hands. That's what they're doing. That's the whole point of data sharing PFOF. All right.
Data sharing PFOF. It's not even the same thing. What are you talking about? PFOF is. Oh my fucking God. What a fucking mess. This is a disaster. Oh
your
God.
Broker have an option to go directly to the stock market. And are you avoiding dark pools? You have to ask those two questions. They have to give you the option of going directly to the market, not, smart shit or, because it's like they're trying to say to you, hey, you can use us and we'll get you best execution. All right. Best execution is never best execution. It's broker talk for treachery, for dark pool treachery. That's what it means, you guys. Okay.
No, that's actually not true, Al. That's actually not true. That's actually very much not true. What the fuck? I'm skipping numbers, Model 3, dude. I'm skipping. I went 531. You are not going to get a mid fucking spread fill on the exchange. You are not. You are not going to get it. You are going to buy at the ask and sell at the bid. Period. Unless you are on a payment for order flow, market maker, internalized fucking platform. Okay? Period. So yeah, you will get a better fill on Robinhood because it is being executed off exchange. Oh my God. What a fucking treachery. How treacherous is that? I want to pay more. I want to pay more for my order so that my profit is lower. What the fuck? Makes no sense. But his audience doesn't have a clue, so he can get away with this bullshit. Bullshit.
In mind. Never, ever, 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 for any reason, use that option. Go directly to the market, New York Stock Exchange, and avoid the dark pools completely. Right? We know this.
Yeah, we know this.
Your squeeze money could just get gone away. They could park your orders, right?
Park your orders. Yeah, you got that from Lou, didn't you? Got that from Lou.
They lend your shares out.
Park your orders.
Permission.
Jesus,
by the way,
fucking Christ!
Remember this when you.
How is this legal? How is this legal for somebody to put this much fucking misinformation out? Oh my God! How? I mean, this is all verifiably wrong. Fuck me.
When you're selling on the market, it's not just buying; you're also selling directly onto the New York Stock Exchange. Avoid the dark pools. All right, avoid the dark pools.
Yeah, because you wouldn't want to sell at a price higher than the bid price. That would be fucking treacherous.
Robinhood does that. So does Ameritrade. A lot of people are still with Robinhood.
Yeah, you need a source for that.
A lot of people are still with Ameritrade. People that have got so much money, you know what I mean? So be smart about it. Do they turn on your margin account if you're short money when buying a stock? Okay, let's say you want to buy 600 shares of Microsoft.
That's not how it works.
And they cover you on margin, but it gives them permission to do whatever they dollar. That is a margin account, and you just don't realize it yet.
I mean, there's like 3 actual items on this list.
And if you even have a penny
repeated
of their money, guess what? That obligates you to give them control of those penny. Anytime you have a cost run over because you're buying and you're maxing, they will do that for you without you knowing it. They'll turn your shit on if you try to maximize shares and you don't have enough money to cover the costs. Okay.
Yeah, source needed on that too.
They do shit like that. So keep this in
mind.
Yeah,
did they do it to you? Do you even have a fucking brokerage account? Have you even actually ever fucking traded a stock? Where do you fucking live? What is actually your name? What is your experience? Who are you? Besides a fucking FUD artist. Jesus fucking Christ. Oh my God.
Oh, they have a
I'm losing
reputation
it
to do
here.
stuff like that? Don't do it.
This guy needs to fucking go away.
And say, hey, do these guys turn on margin without you even knowing about it? Talk to other investors. Look on the internet. Put a little poll out there. Hey, have they ever done this to you guys? Look for those websites that do the consumer reviews and find out for yourself. And then most importantly, best execution is never best execution. Best execution is broker talk for dark pool. Okay, that's all that means. Don't ever believe them when they tell you, "Oh, we offer best execution." No, they don't. They run it through the dark pool.
Well, it doesn't matter where it's executed. That is the biggest fucking myth, lie that the apes have told themselves, that they've been told by these idiots, that it matters where your fucking trade's executed. That if it's not on the lit exchange, it doesn't matter. It doesn't count. Yeah, guess what? 5 shares don't matter no matter where the fuck they're executed. That's the truth. 5 fucking shares, odd lot orders don't matter no matter where they're executed. This is all just nonsense.
Cool. Price number.
It's not about, you're not a fucking size trader. You're not trading, you're not buying to move the market. But these apes have been told that they can move the market. Fucking lie. Biggest lie of the fucking year. Or last 2 years.
To the market goes buys and sells. Go directly to the market for buys and sells. Go directly to the market for buys and sells. Avoid the dark pools. I said it 3 times. Now you know, okay? But these are the things to look for, you guys.
Look at how many spelling errors are in here. Paramission. Execution. Right. Treachery. Right.
The reputation, the PFLF not being present, going directly to the market, share lending, margin fuck.
Good reputation from professionals, not day traders. Yeah, because no professional day trades.
Excuse me,
Go
treachery.
fuck yourself.
Turning on margin, and of course, do they use words like best execution? Because if they use their proprietary algorithm, you're going to get screwed because that algorithm is meant for them, not for you. Okay. That being said, I'm
That's
Alfred
why.
Boston. I hope you found value in this video.
Yeah,
If
we
you have,
found
please
fucking
share it with
negative
other
value.
people because they may not
You
know
made
this.
people
There's gonna be a lot of people
stupider
that
with this
don't know
video.
this information. Share it on your Twitter.
Fuck you. You know what? This fucking asshole. Fuck him. Everybody should do this, by the way. Fucking report this shit. Of course, they don't really have a great fucking category for it, but yeah. Fuck it. Won't do any good. It won't do any fucking good. Ridiculous. I mean, it's ridiculous. Like, how in the fuck is actual, like, knowledge and you know, true information and honest effort, you know, to get back? How does that ever stand a fucking chance against this shit? It doesn't. It does not. But it doesn't matter because that channel, I'm sure that channel makes YouTube money. I guarantee he's probably monetized, right? So he makes money, everybody makes money. That makes it okay to be a fucking idiot and lie to people. No, it doesn't. No, it doesn't. It does not make it okay. Everybody, go fucking report his videos. Particularly part 2 of his bullshit here. And the difference is, this actually deserves to be fucking reported. Part 2. This is the one. Right here. Right there for you. So, Jesus Christ. 1.8 quadrillion. Oh, they're using quadrillion now. Fuck me. Joe Biden is about to devastate AMC short. So he can't bring gas prices down. He can't bring the gas price down. But he can devastate AMC short sellers, I tell you. Yeah, he can, boy. Fuck. Ah! Oh, my God.
What's up, apes? Welcome back to Finance News.
Who is this?
For joining us today and for your
oh my God, we haven't heard the female finance news person in months. We haven't. Oh my God, it's been so long. Do you guys even remember that there was a female who used to be on here? Holy shit. Where's Clay? Where's his faceless ass? All right.
Kathleen here, filling in for Clay, so we can be sure to get you all of your AMC news. I'm here with a massive AMC update. The hedge funds just lost a major source of liquidity after several more Chinese companies were blacklisted.
Chinese bullshit. Look at that. Are you kidding me? They are still hyping the goddamn fucking China shit.
Sure to stick around, and if you want to hear more of me, please make sure to click that thumbs up button. $1,000. Personally, CT.
Okay.
Guys, check this out. AMC has a massive bullish OBV divergence. Has been at 100% utilization for 4 months. CTB rising.
I'm not even going to go look and see if that's true. It doesn't even matter.
And shares on loan. All indicators that a short squeeze could be imminent. All I know is I'd be insane to exit here. AMC has been looking stronger than ever.
That doesn't sound like a shill or anything. All I know is I'd be insane to exit here. That sounds exactly like
an on-balance volume divergence that shows that the apes are not leaving. We are on day 98 of 100% utilization, proving that there is quite literally a line of hedge funds waiting for the AMC shares to cover their positions. Cost to borrow is at an all-time high.
What did she just say? Oh my God.
As we continue to see an on-balance volume divergence that shows that the apes are not leaving. We are on day...
That's not what OBV says, okay? That's not what OBV indicates at all. It doesn't tell you if people are still holding their shares. How do you think that a fucking indicator could tell you that?
We continue to see an on-balance volume divergence that shows that the apes are not leaving.
No, all it shows is the volume lately has been fucking anemic.
We're on day 98 of 100% utilization, proving that there is quite literally a line of hedge funds waiting for the AMC shares to cover their positions.
waiting for the shares to cover their positions. Honey, they don't borrow shares to cover their positions. That's not how it works. This utilization refers to share borrowing for short selling. Okay? Wow.
Cost to borrow is...
I didn't even think it was I thought it was impossible for somebody to be dumber than clay on here. And it actually, you know, came
at an all-time high, with the most expensive going on sale at nearly 50% premium. And we are seeing a massively high short interest going on sale. See shares to cover their utilization.
Okay, sorry.
Cost to borrow is at an all-time high, with the most expensive going on sale at nearly 50% premium.
50% premium? Yeah, again, 50. If it were 50% cost to borrow, it would be 1.8 cents per share to borrow shares, per share per day. And it's not 50%. It's not.
And we are seeing a massively high short interest and shares on loan, guys.
Yeah, they're going to borrow shares to cover short positions. That's a new one. Also, the short interest goes up and down, so clearly they're fucking shares to borrow. They're just not being reported to ORTEX because they know that the apes are up ORTEX's ass. And they're hinging on every fucking little change. So, just like Wall Street does, they change their tactics. And for the last 100 days, the utilization has been at 100%. And the apes are sitting here like shitting their pants like, oh my God, it's going to squeeze soon. And no, it's not. Wall Street is just fucking you in a different location. That's all that happened here. Like now it's in your armpit or something.
We are
like,
closer
dude.
than ever, and the hedge funds don't know what's coming. They continue to double down on their short positions.
No, they
don't.
And
while we continue to see the short interest moving downwards just slightly, we need to remember that these numbers are self-reported. And
no, they're not. No, they're not. Oh my God. Here we go. Here we go with the self-reported FUD. Literally. Okay, this is another video that's going to get reported. I'm done with these motherfuckers. It's not self-reported.
Just slightly. We need to remember that these numbers are self-reported and very much likely higher than what we're seeing on the chart. This is the most bullish sign yet. The diamond hands are the way to go. And given
the short interest going down is the most what?
That things just got worse for the hedge funds, we can be sure that something big is
Yeah,
coming.
because they were able to return 16 fucking million shares. Holy shit.
The U.S.
This is
added
so
5
stupid.
companies in China to
Oh boy, look here. Oh, look at the butcher of Wall Street. Boss Blunts, another fucking moron. Yeah.
Tuesday for allegedly supporting Russia's military and defense industrial base. To which Marcel Kalinovich replied, by executive order of the president, we're going to be so rich.
When was this? No date on here. No date. He's still saying that shit? What a child.
After losing collateral from Evergrande, President Biden's executive order, Russia, and several other sources that had been keeping them all afloat, the hedge funds have now lost an additional 5 companies that can no longer be used to hedge against their short positions.
Oh my God, yeah. Wow, oh my God, I can't even believe this. I cannot, I mean, I know I say that all the time, but I honestly can't here. Boss Blunts was fucking 100% dead wrong about the stupid fucking executive order. And now, apparently they added 5 companies to it, and he's still hyping the damn shit. He doesn't care that he was wrong. That shows you the level of a fucking idiot that you're dealing with here. He doesn't give a fuck. He doesn't care that he was wrong. He'll continue to hype the shit. Oh my God. Oh my God. That is so fucking silly. What a clown. God damn.
the one thing that the hedge funds cannot afford to lose. We have already seen margin calls in a drastic degree, and within the last 6 weeks, well over 2,000 companies have been margin called, showing exactly how precarious the situation is.
Yeah, and a lot of good it did, didn't it? Oh
to make matters worse, many of these companies were moments away from liquidation, which is the first step in the mother of all short squeezes that will drive the AMC price to the moon. We need to be prepared for anything.
This sounds like,
and it looks
this sounds like some goddamn like dystopian, like futuristic, you know, video or something. I just don't like. God.
Rather than later. And with even financial advisors joining the community, the squeeze thesis is looking
financial advisors joining the community. Okay, we're going to be, you know, we're going to need a source on
stronger
that.
Than ever. Alessandro DeLulio tweeted, "You can love me or hate me, but this is my job. I'm a financial advisor."
Oh yeah, we believe that because some asshole.
I know economics and finance. Believe me.
Trust me, bro. Trust me, bro.
AMC is not worth a penny less than 3 digits per shares.
Fuck off.
Squeeze will come. It's a math fact.
Yeah, fuck you all. That's what a financial advisor says. Let me tell you. Are you fucking kidding me? What a joke. What a fucking joke. Oh my God. I don't even want to, I can't even listen to that.
That the hedge funds
so
are
fucking
done
ridiculous.
For. Sarah Klein tweeted, "The most dangerous thing the hedgies don't get is we are still with AMC to the moon or zero. No matter what the hedge funds say, no matter what their narrative is, the ape community has made the..."
Yeah? You're here with AMC to the moon or zero. You're giving them 2 choices. Huh, I wonder which one they're going to fucking take. I wonder. I wonder. You know, that's a dumb thing to say. That is a fucking dumb thing to say.
The ride or die
Why would you say that?
To either ride this to the moon or zero. This movement...
Yeah, because you're not fucking investing or trading. You're not investing or trading. You're fucking gambling. This is a degenerate gambling mentality.
Has become so much more than just a money grab. It is an opportunity to truly change Wall Street and the global financial system.
Wow.
This is a once-in-a-lifetime opportunity to be the change that we want to see in the world. And
yeah, the change that we want to see here is all you motherfuckers flushed out of the fucking market. And I'm confident that we'll see that change. I'm confident that we will.
Given the momentum that we have and the waves that we have made so far, there is no doubt in my mind that we are going to do something massive. The hedge funds think they know what's coming. But even with their sentiment analysis trackers and psychologists on payroll, they have no idea the impact that the mother of all short squeezes will have.
They have no idea how stupid we are.
Street. So as they continue to kick the can down the road and reach the end of their rope, we can be sure that our time is now. And with the apes continually holding the upper hand, things are looking spicy for AMC. Well, that's it for today. As always,
listen to that patronizing, gaslighting, misleading, disingenuous. What a joke. Come on. Oh my God. Oh my God. Let's see here. All right. Before I do that, let's go over here one last time. Well, maybe one penultimate time. Okay, same trend. Same trend. Same trend. Who knows? All right. Low volume, weird day, probably doesn't matter too much. All right. The only reason I bought that one share was so it could be lent out for short selling.
Good morning, Ape Nation.
God
we got
damn.
a good one for you today. We got Tony DENARO versus Thomas James. Oh,
that doesn't even look like Tony DENARO.
Oh man. So, Chuck, what do you got to say about that? Well, it looks like Tony DENARO there is going to definitely do some damage, and Thomas James is going to possibly do some DD on this. D damage, who knows, right? So, let's see what happens. Tony DENARO here, checking in. Thank you guys for watching. Welcome back to the channel, everyone. Today, I'm going to kick some ass. All right, let's
Welcome back to the channel, everyone.
Boom.
Today, I'm going to kick some ass.
With the first hit. Oh, he got him woozy. Boom, boom. Oh, man, we need to get a mic check on Thomas James. He sounds like he's slurring his words. Let's go and listen to him. Today, I'm going to share a post I saw on Reddit. Shit.
Phil needs to do more videos like this.
Tony, I'm going to execute you with my words. I'm going to get you, Tony. I'm going to, Tony is, shit, Tony just won't stop hitting me. Fuck. Shuck. Today, I'm going to explain how you're going to get vaporized. Shit. Maybe not. Shit.
See, Phil for real would be a great anti-Moass YouTuber. I know he would. He just needs to make that switch in his head.
Move, please, let me move.
Move. I have a new goal. It's to liberate Phil for real from this fucking narrative, because he actually is funny.
Did you see the fight? Oh man, I saw it. And Tony, hey, don't let the age fool you.
Come on.
Tony will continue to kick some ass here. Look at him. He's badass, ladies and gentlemen. Let's get a replay on that shit. Boom. Right there. That's where he messed up right there.
Yeah, I wish Phil for real.
Boom. Oh my god.
Just do this.
It looks like Tony DeNaro is going to have Mr. Thomas James slurring his
He's
words.
probably savable.
Goodness gracious. That is incredible. This fight was
with
amazing.
a little octagon action.
Ladies and gentlemen, this fight was
he
brought
changed his
to you
mind.
by you know who. Yeah. And don't forget, this is the winner, Tony DeNaro.
All right. Roll another blunt, man. Boss, roll another blunt, man. These are good times. Truly good times.
I met you at my show, yelling and screaming on the front row. Jumped on stage, knocked me down, you made me horny.
Okay. I need the price to go up. Like very soon, I can't take this anymore. I'm checking price and it is lower every hour. Check price, bad price. I can't take this anymore. I have over-invested by a lot. I need the price to go up already. Can they do something?
Oh man. Fantastic. Well, thanks Tanko Native, appreciate it, man. Song has been kicked. Yes.
You got a real bad temper. I got another woman that wants me.
Thank you, Antoinette. But like I said before, I'm not doing anything here. This is nothing. I wish it were, but
you need to tuck your tail. You're a woman.
And I thank you and I appreciate that. But this is to me it's almost like. Well, yeah. I mean, I just I can't believe that I'm still doing this at this point. Honestly, like a year later and almost exactly 11 months at this point, I guess. But fuck. I was surprised when it was still going on in January. And now here we're in July already. Crazy. No comments. No new comments. It's alright. So, I was looking at this here. I have 38 videos and 98 live streams. So 2 more live streams and it'll be 100 live streams. So that's kind of cool. And the views seem like they're going up on a lot of these videos, so that's good. Looking at the analytics here. Just got a subscriber. You know, some days we lose some subscribers, but that's okay. Let's see here. Audience, this is what I wanted to show. Okay. I need the price to go up. I have overinvested by a lot. I'm so happy to see. Fuck, get off there. I'm so happy to see. Come on, what the heck? All right. I'm so happy to see that this number, the male-female split, is now, you know, somewhat respectable. And I think it's the 2 female viewers that are here probably. But this used to be literally 100% male, even though Lynn has been here pretty much since the beginning of this and the other channel, the first channel. So I don't know what that means, but anyway, that's good. And the age, you know, like I said, I think last time, this is my age range, so, you know, most of the viewers are in that range, so that's, I think that makes sense, right? Most of the viewers are from the United States, although we do have some from Nigeria, apparently. And Turkey, but this is in the last 28 days anyway, so, whatever. But, yeah. Oh yeah, there's going to be a lot of videos tomorrow, so we'll probably pop on eventually, you know, at some point. I got to do a lot of laundry tomorrow, so, you know, but, well, yeah, we'll see what we can do. Let's do one. I'll do one last check. Make sure that nothing juicy has popped up, and we'll check the futures one last time. Oh, actually, yeah, you know what, that's a good point. So nothing new there. 20 Scott live stream number 9,999. AMC price 99 cents, and Ape still waiting for the Moass. Right. Oh my God. Probably. Yep. Okay, so what is this here? I don't know what that is. Japan's open. China's in pre-market. What's this? Indonesia down 2%. Taiwan. Malaysia. Singapore. Hong Kong. Philippines. Vietnam. Yeah, Vietnam. Mongolia, Laos. That's the Japan VIX, which is weird because the JP225 is up 0.5%, but they're saying also the VIX, their VIX is also up 4.18%. So I don't know what's going on there, but that says July 1st, so I don't know. Australia's open and Australia's up, but you know, who knows? All right. And finally, it's drifting lower. But this is such low volume that who knows? A lot of these 1-minute candles have less than 100 contracts traded, so who knows here? But the VIX futures are back up to 28. It'll be interesting to see what happens tomorrow night when the futures reopen after being closed for the day. So we might have to stream during that time too. We may have to do that. That way we can check the grifter videos. The grifter videos that we all love so much. All right, well, hey guys, thanks for hanging out with me on Sunday night. I do appreciate it. You're so annoying. All right, catch you guys tomorrow. Have a good night. Happy 4th of July. Hope the fireworks aren't driving you too crazy. I can hear them. I can hear them through my headphones here. But whatever. It's been going on for 2 weeks already. It'll go on for another 2 weeks. Not much you can do about it. Have a good night, guys. Catch you later.